Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of us is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rivian Automotive, ticker symbol RIVN. And so here I am recording this on Tuesday, August 6th, about 14 minutes, starting a minute late before the market closes. And in about an hour and 15 minutes, Rivian will be starting their earnings call, as well as Luminar, ticker symbol LAZR. And so, I wanted to go over both of the charts, hopefully can get to both of the earnings reports when they are released. But then at 5 p.m. Eastern, I will be tuning into the Rivian earnings call, which you can see right up there above my head, connected to it already, so we are all good to go. And so I'm excited to be listening to that. But if you are also interested in Luminar, I am also interested in Luminar, but I can't listen to both at the same time. But we can chat about the charts, how they're responding to their earnings call. So while we're listening to Rivian, we can also, chat about Luminar in the live chat. So let me know in the live chat if you have thoughts, and I can go over levels that do stand out to me. But since the market is still open, we got about 13 minutes left. I thought it'd be cool to look at unusual whales and look at the options activity around Rivian. Unfortunately, I think largely because Luminar, price is right around $1.40. The options chain is not really that exciting for them. And for me, I've been holding Luminar for a while. It's always just been pretty boring, the options activity. And so I don't think there's going to be too much with unusual whales regarding Luminar, but I do think there could be some stuff with Rivian, given that the price is notably higher than $1. There is some interesting options activity. And so it might, kind of give away, whether people are leaning more bullish or bearish leading up to this earnings call. And I did take a peek before, and so let's take a look now. I'm just going to share my display with you guys, and and then we can look together. So here is unusual whales, and I have already typed in Rivian up here so we can see that. And I've got 250 results per page. And I'm just going to go over all the filters that I have applied here because, I think it's important if you guys are interested in exploring unusual whales. I have to say it is $48 a month, and so I'm kind of experimenting, placing orders, more or less every day to see if I can make that $48. And I think it's going to be no problem over the course of the month. But for, right now, just looking at the ask side of orders, which is just people buying, whether they're buying or selling puts. Got both calls and puts up there. And, this doesn't really matter because we just got Rivian up there. And the expirations are this coming Friday and next Friday, which is OPEX or options expiration for the monthly contracts on August 16th. And then I also have a premium minimum set to $1,000. So these should just be, larger orders, not, some retail trader just picking up one call or one put, but, placing bigger orders. And then here I'm actually going to delete this. So volume over open interest is doesn't have to be greater than 1 because there's a better way, I feel, to do that. That's just by doing this. So that does end up being greater than 1 in that case, and then also doing out of the money. So, we'd be able to enter something that would then swing to in the money potentially. And so if we look right now, it does look like there are, as far as I understand, I'm still fairly new learning unusual whales, but it looks like the majority are calls, and premium right now on calls is 13 million, whereas puts about 8 million. But we can just, look here and see what looks to be exciting here. This was an alert, a trade alert was sent out, and this is actually a put. I think I saw this, I guess I didn't see this earlier in the day, but I did see a put that was on the ask side. So, with options, there's a ask and a bid side. They tend to be, it depends on the price of the contract, but they tend to be a little bit different in price. And so something on the ask side means that it's being bought. Something on the bid side means it's being sold. And this is for a strike of $14 that expires this Friday. So this person is betting that price is going to go down, not necessarily to $14, but down between now and this coming Friday. And the premium that they've put on this is about almost, $32,000, $31.5 thousand. The average cost of those contracts is 63 cents, but that's for 100 shares, so that translates to $63 per contract. And so we can now look over at this in the options table. So that's a put with a strike of $14 coming up on this Friday. So I'm just going to come over here to the options table, select puts, August 9th right here. And so the $14 put is actually $61 to buy. So it's a little bit cheaper. And so, with price being, not too much higher than 14, it is suggesting that could be coming down. So I find that pretty interesting. I might buy a call or a put before the market closes. That's in about 8 minutes. And just looking at the chart, the thing that really stands out to me, it might stand out to you guys. And, I don't have a huge position in Rivian. I have been adding kind of casually and not too aggressively. I'm a pretty slow dollar cost averager when building positions. It's just how I do it. Works for me. You got to do what works for you. But looking at the chart here, there's this gap here that was formed, and we haven't filled it. When we did pull back, we came back below 1330, which we look back, that is the low before this big up move. And we did have, this pivot high here, so that support suggests that. But, one thing that I pointed out, I made a video on it, I thought this might be an inverse head and shoulders with a measured move, and we did see that measured move play out. It was a beautifully timed video. I wish I had partaken in it. I didn't. But with that being said, there's this gap here. And pulling back to retracing to the scene of the crime would be that purple uptrend, and that could correspond with this level here at $12. Does correspond with the 65% retracement, which is the lower portion of that golden pocket there, ranging from the 65% retracement up to the 618. And that orange level is, really just over here, kind of arbitrary, but the low right around $12 there. And so, I find that contract to be pretty interesting. So this is something that I might open up just before close. We will see, because I've been having fun with unusual whales. And with this alert, 31.5 thousand, that's a lot of money. So what I'm going to do, I'm going to try to, keep this up here. So I'm just going to put that there. And so that should, here, let's see. Oh, and now there's one for 16. Okay, so I might bring that over here. This is, 36,000. This is also expiring this Friday. But this is a call. So this person's betting long. That price is going to go up to, $16 a share, or at least just go up. So, it's kind of, precarious. Is it going to go up or down? Either way, 36, 30, above 30,000 placed on these. So I'm just going to do the exact same thing, copy and paste this. Create a new tab and put that over here. And then we can continue to, look at the flow. And so here, this is, I think, more of the same. But these are all coming in. These are coming in hot. This is 15,000. But this is, somebody else's position. So 15,000. And this is, the same contract, 14 put. This is 14 put. This is, 15,000. 31,000. This is a call, so going long. So hopefully this is interesting. I've just been having fun exploring unusual whales, trying to get better at navigating it and stuff. As you can see, I'm a little bit clunky with it, but I just don't want to lose those orders that and that's this is an alert for put, and here we've got alert for a call. Let's see, alert for put. And yesterday I had done the Palantir earnings call, and I placed an order right before close, a call, but it was too far out of the money. It's probably going worthless. I was thinking about selling it today, but it wasn't a big order, so I'm fine to probably just hold it until the end of the week, and I'll let it go to zero. That's fine. Because the foolish thing was that it expired, this coming Friday. And so, if you're wrong, there isn't really much wiggle room. And so this one, this is a put to $13.50. We can see here though that the expiration is the 16th, so next Friday. The average cost for those contracts is 62 cents, premium 16,000. So it does seem like there's a good amount of bearish sentiment as far as these larger, alert orders that we're seeing here. So I find that to be pretty interesting. We've got about 4 minutes before the market closes. So, am I going to, place an order? We will see. So this volume majority on the ask side calls, but at the same time, good to not go with the crowd. So maybe that's something. Instead, go with these big orders. I've got about 3 minutes. Do I want to go long or do I want to go short? I don't know. So I'll just look at these ones that I just pulled up. $14 put. This one's 31,000. This put 15,000. This one again 16,000. And then for the long one, that premium is 36,000. So of these that have been alerted by unusual whales, it does seem like there's more kind of coordinated larger orders placed on the put side, or the bearish side, I should say. Then there's this. Yeah, so I mean, these are ones that I've been pulling up. Let's see. Is this one 15? I believe that's the same one I got over here. Yeah. So, I got about a minute or two left to decide. Do I want to go long or short before earnings? Okay, and I think I'm having issues with the video because of this unusual whales options activity. And so what I might do is I might just pause that as we are just before close. And I'm sorry if the video quality is not so great. I think it's just because I have too much of this stuff going on. But let's see. So I'm kind of intrigued by the $14 put that expires this week, just for fun. But actually there's another one that's let's see, this 13.5 expiring next week, 62. So let's just see. I'm probably not even gonna be able to place this order. I'm just doing it on my phone. My heart is racing because I don't have much time. But let's see, put for next Friday just to give myself some wiggle room, and that is for 13.5. And so, what I've done is, you can be mad at me if you want, but I bought a put that expires next Friday just to have some fun with it based on unusual whales options activity. So this contract, I wanted, to have a little bit of extra wiggle room because I'd found that ones that expire this week are not so great because they go out of the money, or it can be tough for them to go in the money. And so this one, this is this coming Friday. This one is this coming Friday as well. So I'm going to omit those. This is the one that I partook in, but I'm going to close that down because I think it's screwing with the video quality. And so now with the market being closed, we can look at, the 1 minute time frame. The market just closed. And so we will see what happens with earnings. And so Buzz preview, Rivian rallies, analysts see sluggish revenue growth. So we'll see, if I'm that call order was right or not. But, I find it fun. It's one contract, risking $62, not ideal. Wow, Luminar has not been very interesting over the course of the day. Let's look at the 1 hour time frame. Or here the daily, and and so looking at the charts, do I think that one is going to be higher or lower? I apologize if the video quality is not so great. I'm getting an error, so I'm actually going to pull this up in YouTube to see if I guess you guys can see what I'm looking at. And I might actually hide this just because it's probably not so interesting. And then you're just looking at that chart there, which is for Luminar. And let's see, I will actually switch it over to Rivian because that's kind of the stock of the hour. But yeah, it looks like it's going up in the after hour, so maybe it's good for me to buy a put and get it going. I'll lose money, so it goes up. But I'd be gaining money anyways because I'm holding shares. So I guess that's kind of a hedge. But yeah, let's see. The 1 minute time frame here does look like it's going up. And so, yeah, that put's probably going to be worthless, so that's fine. And then Luminar has, just not been doing anything. I feel like, looking at the charts, I have to say, I feel like Rivian does look like it could be going down to fill that gap. Doesn't seem like we're getting that response, though. But Luminar, switching over to, I got to do at least the hourly time frame because there's not much going on. I mean, this came back to this prior low. I think it could go down to even lower, which would be a 121. That was this prior low over here. But maybe there's a double bottom here bouncing above that purple downtrend. So we will have to see. And yeah, I don't know why this is going so slow. But hopefully it's not. I mean, I'm getting an error that says YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience. So, I'm sorry if this is a little clunky, but I don't know what to do about it. I did close Unusual Whales, and I don't really have any other applications open that could be slowing this down. But yeah, looking here at Rivian again on the 1 minute time scale. Well, this is Luminar. Yeah, we gotta get some stuff going on with them. But Rivian, yeah, up above $15 right now. So we'll see if this is a fake out break or if this is, something legit. And with that being said, I'm going to switch this over to not Luminar, but to Rivian. So you guys can see that behind me. And maybe I will do, looking at the open interest for this week, or sorry, not open interest, but the open interest or the max pain. For Rivian this week, 1550 is the max pain. So that could be suggesting that price is going to be going higher, and we're kind of seeing that now in the after hours. But then with Luminar, it's around 150, which also could suggest that it's going to be going up. But with that being said, I am going to close these tabs because I think that they're kind of slowing stuff down. And I don't know why this I'm getting this error on the video. I've not really had this issue before yesterday when I was doing the Palantir stream. But hopefully that calms down. Maybe I will close Twitter or X and close this one tab from Studio. And maybe I'll close that as well. So I've only got the two earnings tabs open. And Rivian looks like, maybe it's bumping into resistance around 1521. That is the 382. I'll take a step back looking at this on the daily time frame. Which is, the 382 right here. So just above where we closed, was thinking that could be acting as resistance, as that is Fibonacci retracement from this high of 1886, down to the low that we hit on the 5th when we opened at 1296, the low of that day. So with that being said, maybe we're, right around resistance, yeah. And looking at the chart now on the 1 minute time scale, what's going to be going on with this. And so I might, and you guys can let me know in the live chat if the stream is kind of clunky. I don't know how to adjust that. But yeah, I mean, it is what it is, I guess. I've got the pop-up open, so I'm seeing if that helps at all or anything. yeah, we'll see. Maybe we just need to let stuff refresh. And yeah, so anyways, I am going to go to oh, didn't mean to do that. One second. I did mention, that I'd be setting this up a little bit, so please don't be frustrated if that's what you're seeing me fumbling around, but I kind of got to make sure I get this set up, before we got 54 minutes before the earnings call starts, and so I want to be going to Rivian Investor Relations, and then we can see this page to look at. Okay, so their earnings have not yet been released, so I want to come back to this Luminar press release. Let's see. Just trying to see if yeah, they have more stuff coming out. So let's see. I want to do the overview. News and events. Luminar bolsters balance sheet and reports second quarter 2024 business update. So let's check out the press release because this just came out, and I will also do the same thing for Rivian to see, this has not been released. So yeah, I think this is nice to kind of be doing both of these so we can look at, both of them. But I will just flip back over to the chart. Turnaround Tuesday was good today. Saul, I'm glad it worked for you. And Danson Bar, good afternoon to you as well. Yeah, so I just, maybe it's a gamble, maybe it's stupid, but I did just buy a put on Rivian right before the market closed because I was looking at the unusual whales option activity. There were some calls. It looked like a lot of calls, but I noticed that kind of like coordinated buys seem to be more on the put side. So I think it's for a put expiring next Friday, so the 16th, with a strike of $13.50. And I risk $62 on it, so it's kind of a fun thing for me. And I did get, and the video warning thing did go away, so hopefully things are looking a little bit cleaner. But yeah, this can always turn around, so who knows what's going to happen. But it might mean that if it's being so volatile that they've released it. And yeah, man, Luminar's just been doing this barcoding thing all day. Really not exciting. But yeah, wow, 1380. That put might be printing in the morning. I'm sorry. I will get more shares if it's lower, if the price is lower. But also, I will accept the loss too if it's higher. And I'll cheer because I'm holding shares. But yeah, I'm going to go back to the Rivian website to see if their report has been released. And so, yeah, this is quarterly results. Oh, okay, so production and delivery. So yeah, when did this come out? So this was July 2nd, so this is not coming out today. So I'll come back to this. I'm just going to look over the Luminar earnings report that we do have here, and so we can get an idea of, is it going to be bullish, bearish, or is it going to be flat? I personally think that like $1.30 is a great dip buying level for Luminar. I am a shareholder of both, but I am more heavily invested in Luminar. But anyways, I'm just going to read this for us. So Luminar bolsters balance sheet and reports second quarter 2024 business update. So this did come out right as the market closes. And so they restructured $422 million of debt with convertible exchange and raises $100 million of new capital. And so here, coming from their headquarters in Florida, today Luminar, a leading global automotive technology company, provided its quarterly business. I'm just going to make sure an ad doesn't get in the way. Provided its quarterly business update and financial results for the second quarter of 2024. Luminar announced today that it has entered into private, separately negotiated transactions to reduce its debt, extend maturities, and receive $100 million in new capital to bolster its balance sheet. And so this directly addresses the company's capital structure overhang, captures a discount on existing notes, and helps provide the financial runway to execute the company's business plans. And so some key highlights of the transactions include holders of approximately $422 million in convertible senior notes due in 2026 have agreed to exchange for approximately $274 million of convertible senior secured notes due in 2030. In approximately $148 million reduction in aggregate convertible debt principal. And so while I'm sure most of you here are not interested in AMC, this does remind me of what AMC recently did with billions of dollars of debt that they had that was due in either, I believe, 2025 or 2026. So similar to Luminar here with, $500 million, almost $500 million due in 2026, extending that to 2030. I think that's great. That gives them more flexibility to pay that off, more time between now and then. Let's see, it's 2024, so it's 6 years, a little bit less than 6 years maybe, depending on when they are due, which month. But that does give them more flexibility to move into a more profitable position to pay back that debt. So I think that's great. But debt, of course, on the balance sheet is not so great. So I do think that this is a great move, but it could be not having debt would be better. Let's just put it that way. But you got to invest, to have a turnaround and to invest in the future, and that's what we're all doing here, believing in these companies. And so I will. I'm just going to check the live chat here that Dancing Bar is saying Palantir got yesterday a very nice pump. Maybe Super Microcomputer got the same. And so I think I was looking at some semiconductor stuff today, unusual whales. I saw some call orders on NVIDIA being bought, but then also some, I think, is that SMCI? I think some puts were being bought. But yeah, I haven't been paying attention too much to the semiconductors on the short-term time frame. I've more been thinking about them on the longer term. I think there's a lot of downside with them. I did just put out a video on shorting them today, not necessarily shorting them today, but building short positions over time. So I think that's a pretty interesting play. But yeah, and then I also see, and the others too. Yeah, I think that there will be bounces, but long term, I think that the semiconductors are kind of a sign that we're entering a bear market, in my view, that the top is in. But those bounces, profit can always be made on them. It really depends on your time frame. And I'm just going to check on the chart because I have been rambling a little bit. So it did get a pullback, now bouncing up 1464 for Rivian, since I have been chatting about Luminar. Look, been doing this, barcoding, but then we did, kind of gap down in the after hours to just down 1%, trading around 139, which is 1.5 cents. So nothing too crazy there. But yeah, we'll keep looking at these charts, but I'm going to continue reading Luminar's earnings report, and then I'll switch over to Rivian, and then we'll focus mostly on them, but happy to be chatting about Luminar in the live chat as well. But yeah, we'll continue on with this report here. And so additionally, these bond investors have agreed to provide Luminar with $100 million of new non-convertible senior secured notes due in 2028. So again, kind of extending these due dates from 2026 to 2028. So I think that's good, having some more money, some more flexibility there. And the extension in maturity of Luminar's debt from 2026 to 2030 and the $100 million of new capital that's due back in 2028 provides the company with additional liquidity to help realize its growth and vision on its path to profitability. And so I think it's pretty key that there is a path to profitability, and that, really you can kind of think about it if you're an investor in Luminar, that, time horizon may not be months, may not be a couple of years, might be down to 2030. And so this is, now they see a path to profitability that being extended to 2030. And the transactions are expected to be completed in the coming days, subject to satisfaction of closing conditions. So it sounds like they're still negotiating them a little bit. And so here we've got a quote from Austin Russell, the founder and CEO We've now successfully ramped production for the first global production vehicle with standardized LiDAR, and our shift from all eyes on launch towards cost and efficiency are beginning to pay off as we begin to convert our multi-billion-dollar order book, said Austin Russell, founder and CEO. He continues, this transformational transaction signed today represents a level of conviction from our institutional stakeholders that Luminar is here to stay and thrive this decade. So this is like a decade-long investment, not a short-term swing. But it can be. There is going to be some volatility around it, unless it's barcoding, then not so much. And I'm just going to skip an ad that might be popping up, so I don't want to distract you guys with that. We were able to capitalize, so I should say Austin continues, we were able to capitalize on the challenging capital markets conditions in our industry to bolster our balance sheet and raise substantive additional capital from investors to fulfill our business plan. So I don't know if that means capital raise or selling some shares for some money. But yeah, here are some business milestones and mid-year update. And so at the beginning of the year, Luminar outlined the following business milestone targets to be achieved by year end of 2024. And as of the mid-year mark, the company is on track to meet or beat each of these targets as follows. Pass final run and rate production audit ahead of Volvo SOP. Achieve global SOP and ramp with Volvo. And that has now been achieved, so number 1 is done. On April 2024, Luminar announced its SOP for Volvo cars. In June, Volvo announced the EX90 SOP through quarter 2 2024. Luminar successfully ramped its production and met all of its key customer deliverables. So I think that's great. And here, number 2, launch TPK facility for additional capacity and improved cost is on track. And so in April 2024, Luminar launched an expanded partnership with TPK, known as LTEC, to substantially reduce costs of industrialization. Subsequently, the company announced that it reduced its workforce by approximately 20% as it transitions to the asset-light industrialization model. Okay, and then number 3 here is that they plan to unveil the next generation LiDAR, deliver samples to customers. And so achieved unveiling of Luminar Halo, on track for sample deliveries to select automakers by year end. So that's great news. Luminar is realizing the benefits of its existing $2 billion technology platform with Luminar Halo development cost and time substantially lower than its previous LiDAR generation. So that's great news. The cost of this technology is getting cheaper to produce. So that's going to be good for LiDAR or for Luminar. That's going to be good for customers as well and consumers, you and me, those who drive vehicles that might be having LiDAR sensors on them in the near future. And so expanding ecosystem, this is number 4, expanding ecosystem around LiDAR. So for example, semiconductors, AI engine, and software and insurance. And so one thing that I do find really interesting about this, everybody's talking about NVIDIA, everybody's talking about, like in the comments here, super microcomputer, all of these, semiconductor stocks that have really, especially NVIDIA, taken, the full-on market share. But then when we hear companies like Tesla, Elon Musk starting to talk about them doing some AI and or semiconductor stuff, Luminar has talked about developing their semiconductors. There's this market share that is, piled into these semiconductor stocks. But what about the technology stocks that are developing their own in-house semiconductors, AI engines, software, and insurance? And so, I feel like Luminar is very similar to Tesla in that sense, is that they're developing a lot of technologies in-house. And like you can view Tesla as an EV company. They're actually a technology company. You can view Luminar as a LiDAR company. They're actually a technology company. And so there's just an expanse for them to fill. And I do see up 17%. And I guess that's on Super Microcomputer. Love it. So congrats to you. It sounds like you were long on them. Don't know how let's see, long-lived that will be. I think that we will eventually be getting another top, a little bear market rally. When we get to that top, dead cat bounce might be coming down some more. But anyways, I'm going to continue here with point 4. And so they are on track with this. And so in the second quarter of 2024, Luminar launched its Sentinel software solution with first shipments to automakers expected by the end of quarter 3, 2024. So we should probably be hearing about that in the next earnings report. So I do think that is great that we have something to look forward to there. And then Luminar Semiconductor Incorporated continues to grow, including the acquisition of EM4 to expand from chips to modules with its customers. And then here are a bunch of financial details. To be honest, this kind of stuff does tend to put me to sleep. I don't know if it's going to put you guys to sleep. And that is something that the CFO will be going over during their earnings call. And so I do have a link to that down below if you guys do prefer to listen to Luminar over Rivian. But I am now going to switch over to the Rivian page to see if they have updated let's see, we got a shareholder letter from them, so can check that out. But I might actually switch back to the chart to see what's going on. Yeah, lots of volatility here. Did come down to 1330. I had that level marked, so that's pretty interesting with Rivian. But, it's not necessarily like, is this, what did it open at today? Let's look. We're at the minute time scale. It did open higher, and so we are trading lower. So, it's not that great, but this is in the after hours trading session, and it might not... we might be seeing a gap up tomorrow. Who knows? Once the call starts, things might be looking a little bit different. And then Luminar still, just about the same, right around 139 at 139 in the after hours. But maybe we get to see some volatility when that call starts in about 38 minutes, something like that. Same time as Rivian, unfortunately. But with that being said, and now being back on this chart, I'm going to look over at the letter to the shareholders. I'm just going to let's see, zoom in a little bit here. Got this beautiful picture. I was actually contemplating using this image for the thumbnail for this video, for this stream, but I thought that, I went with a different one. I don't know if you can tell, there is an image of a Rivian, the same, I'm not the best at knowing what the numbers are on them. Is that the R2? I'm not sure. I'm sorry about that. I'm new to being a Rivian shareholder, but I do see these vehicles. Actually, there's one down the street from me I see pretty frequently. It's a beautiful vehicle. But anyways, I will continue on with reading this shareholder letter. And so key highlights from this are that they launched the second generation of R1 vehicles. So great there. Also announced technology joint venture with Volkswagen Group with a total deal size of up to $5 billion. So that's great there. And then a 41% improvement in the cash used in operating activities as compared to the first quarter of 2024. So being more efficient with money, and I think that's especially great too, with the possibility of the U.S., perhaps the world going into a recession, considering that we have seen these topping signals in the stock market, the VIX rocketing up yesterday over 100%. That's the volatility index, suggesting that we could be, starting to move into a bear market, which I think that we are in. We're going to have to look back and be like, oh, yeah, that was the top. But right now we can't, it's like when you're in it, you can't see it. But when you're out of it, you can look back and see what was there, clear as day. Anyways, reaffirming all aspects of guidance for the year. So there's just another bullet point there. And we are seeing a 20% expected material cost reduction from our first generation to the second generation of R1 vehicles. And the footnote for that is when comparing an R1 dual motor with large pack produced in quarter 1 of 2024 versus the expected cost for the same vehicle produced in quarter 4 of 2024. So that is, looking forward to, they are, getting better, more efficient at producing these vehicles. And, you expect that to happen. You can look back at Tesla when they were first producing their vehicles. It was, a pretty painful process, but they just got more efficient with that over time. And that's, really the hardest part from my understanding of starting a vehicle company, especially with EVs being, such a new technology that, it takes time to iron out the kinks. And Rivian's definitely doing that. And this is one thing that I'm really excited about because I see them every once in a while. I don't live too far from Chicago, so I go there on vacations every once in a while. I live in a pretty small town, so I don't see them here. But when I go to Chicago, I do see Amazon Rivian delivery vehicles. And there are over 800 million packages delivered via electric delivery vehicles. So I think that's awesome, and you know, the investment that Amazon has put into Rivian, you know, I just think is a real vote of confidence in the company and the future for EVs. And one thing, actually, maybe a little bit of a tangent, but one thing that I was thinking about with regard to Rivian is that, you know, Tesla is kind of its own thing. You know, they're doing their own thing, but Rivian, what kind of, you know, what is the analogy that I would say with an internal combustion engine car company? I was thinking about this yesterday. Rivian makes me think about, you know, Outback, that it's a more sporty, outdoorsy class of vehicle. And, you know, so, you know, like Rivian is not only like the American version of Outback, which I don't know if Outbacks are Australian. I assume they are. But also this being like the more sporty, the more outdoorsy class of electric vehicles, whereas Tesla is more, I guess, urban or, you know, not as rugged, although you could definitely argue that the Cybertruck is pretty rugged. But Rivian with the SUV looking like this, it doesn't really, you know, the Tesla's SUV, is that the Model X, really doesn't compare to this. I just think this looks like a much more rugged SUV. Also, they planned to release the R3 in the future. That looks like a more outdoorsy version of, you know, a car, kind of like the Rabbit, the Volkswagen Rabbit. And they actually have this partnership with Volkswagen. You can't see it here, but you know, right there. Let's see if I can highlight that. So there we go, right there, partnership with Volkswagen. And then also they do have an SUV as well. So I find that pretty interesting. And Saul is saying in the live chat, saw a Lucid car today driving down Highway 10 in Northern California. Yeah, and I wasn't following it, but I saw that Lucid had performed well in their earnings, I believe, or at least the stock price went up. I didn't check that. But yeah, for me, I feel like I think that Lucid is very appealing, but I feel like the partnership that Rivian has with Amazon really kind of sells me with them, and I just find it to be a really, really compelling company. And Lucid, you know, beautiful vehicles, especially, you know, if they're trademarking the Ocean after the whole Fisker fiasco. I think that there's a lot of potential with them, but I do think that, you know, Lucid is kind of more in the niche that Tesla has filled, whereas Rivian, I think, is a little bit different. So I think that's kind of nice, you know. That's just kind of like a different class of vehicle. And also you know, I'm forgetting his name, the CEO, Peter Rawlings, I believe, had worked, you know, with Tesla on the, I believe it was the the Model S. And so, I mean, I feel like there's a lot of similarities there. And I feel like Rivian has its own little niche in the EV space. So I think that's really nice. Looking at the chart here, still down a little bit following the close, but not by that much. 14.53 trading around then, down about 30 cents in the after hours. Whereas Lucid, or sorry, not Lucid, you guys got me going on the other L stock. Here, Luminar trading up at, you know, up half a cent in the after hours, but it is green, so that is good. Just tons of barcoding now, you know, waiting for something to happen. Is it going to go up? Is it going to go down? We do not know. But yeah, I'm going to keep going on with the Rivian report because we got about 30 minutes before the calls start, and I, you know, just want to make sure to go through this. And this is also, I should note, the letter to investors rather than the earnings report. And I will include, you know, I'm not going to do it now, but I will include links to these in the in the description of this video. If you guys want to have easy access to them later, you can read them over in a little bit more detail. But yeah, I'll try to read these paragraphs a little bit. You know, before it was just the nice boxes to read. Now it's a little bit more, you know, paragraph form. But I'll try to read these in an animated way for us. And so here it says that during the second quarter of 2024, we made significant progress driving greater cost efficiency, as we saw above, enhancing our products, further strengthening our balance sheet, validating the differentiated nature of our technology stack and establishing new business opportunities. We believe the introduction of the second generation R1 and expected partnership with Volkswagen Group will fundamentally improve Rivian's long-term profit trajectory and growth profile. And so the technical work stream to prepare the integration of Rivian electrical architecture and software technology stack into Volkswagen Group products is moving along very well. And subject to the execution of definitive agreements and the receipt of regulatory approvals, we expect to close the joint venture in the fourth quarter of this year. And I think that will be a big selling point when they do the earnings call for the year of 2024. That will also include the fourth quarter. And so that's going to be probably, I imagine, an earnings call in February of 2025. Are they going to be able to execute that? And so that could be maybe a make or break as far as the stock price goes. If it's a break, dip buying opportunity. If it's a make, we're off to the moon. So that's something to be looking forward to. And so the execution during the quarter was strong with the success of the retooling upgrade in normal and launch of our second generation R1, which is more capable and offers new technologies, while also significantly reducing material costs and improving manufacturing efficiency. We also announced our expected technology partnership with Volkswagen Group, which we believe creates a robust capital roadmap, meaningful cost efficiencies, and demonstrates that our vertically integrated software and electronics technology has the potential to serve as the basis for new high-return business opportunities. And so Rivian produced 9,612 vehicles, almost 10,000, and delivered 13.79 thousand vehicles during the second quarter of 2024. As expected, production was impacted by plant downtime associated with the retooling upgrade, and as a result, deliveries exceeded production as we significantly reduced inventory of our first-generation R1 trucks and SUVs. In addition, despite the vast majority of R1 deliveries in the quarter being first-generation R1 vehicles, we continued to see the impacts of our cost initiatives and experience an improvement in gross profit per vehicle delivered in the second quarter as compared to the first quarter of 2024. So the plant is now in the process of ramping production of the second generation R1. Again, lots of great stuff coming. And here we can see some photos from the plants, nice line of vehicles being produced here. And this looks like it's a battery assembly, I assume. And so pretty cool there. And, I happen to work in a factory. I don't do work on a line. I work in a lab, but we do have the same kind of gloves. So I find that interesting that they are wearing them there. But yeah, I'll scroll down here. I'll continue with this, but I'm going to flip back to the charts. Now, just so we can see what's going on. Yeah, like right around, the price that it closed at, is it going to go up? Is it going to go down? Pretty suspenseful, actually, for both stocks because, neither have really moved too much relative to their close. LAZR being at the exact same price, and Luminar just being 3 cents lower, or 0.34% down, about 5 cents. But moving, as I read those numbers, and so we'll have to see about that. And here I'm going to continue. And so we believe the introduction of the second generation R1 will enhance execution against our key value drivers. And so I do see some more comments in the live chat, so I'm going to just address those. Antoine, hey, what's up? How's it going? Yeah, we are doing good, Ed and I. I read through the Luminar results, and or I guess not necessarily the financial results, but I read through, and I was actually talking about how Luminar really makes me think that they are like Tesla, in that they are not a LiDAR company like Tesla is not an EV company. They're a technology company. And, developing their own semiconductors, AI engines, software, insurance. This goes really well with what has been leading the market. NVIDIA SMCI, is that the semiconductor? I don't know what all of the tickers are for semiconductor stocks. But they take all the market share, and now that market share is going to be divvied up into all these other technology companies. So I think I think that there's a lot of upside potential for Luminar. But I'm going to continue on here with Rivian, and so focus on demand generation and enhancing the customer experience. So a customer survey reveals that the top 3 reasons for buying a Rivian include interior design and styling, driving performance, and innovative technology. The second generation of R1 builds upon these strengths with a positive reception from our customers. The vast majority of the second half of 2024 customer deliveries are expected to be the second generation of R1 vehicles. So that's awesome, ramping up production of the newer vehicles. And let's see here. Optimize operational efficiency. So the second generation of R1 vehicles include numerous changes that result in more efficient manufacturing process. And the second generation of R1 body has been re-engineered to optimize costs by eliminating 65 parts and reducing nearly 1,500 joints. And that actually reminds me of, believe it or not, SpaceX, in that you learn about like the Raptor engines, and in development of that, Elon Musk has talked about this, and I think they also have had displays of the Raptor engines, where initially it was just like this really bulky engine, had all of this kind of excess parts, and then through kind of like re-engineering it, they recognized that, oh, well, actually, like half of these parts aren't necessary. And so they remove them. And so that's, part of developing a new technology is recognizing that, hey, we had too many parts in that were maybe useful for internal combustion platforms or in, the development of these EVs. But, while in a conventional sense, they're needed, but in a practical sense, as far as EVs go, they're superfluous now. So, I think that's a pretty cool thing. And so the use of high-pressure die castings simplifies the battery pack and significantly reduced the number of parts. And so this is not only a development in, innovation in the EV space, but also in the battery and energy storage space. So I think that's, has broad application outside of the EV space. Just like Luminar, just like Tesla, Rivian is not simply an EV company, they're a technology company. Beyond the body improvements, cycle time improvements were made through the entire plant to support an overall expected increase in R1 vehicle production line rate of 30%. So that is great. And then develop core technologies. Accompanying the second generation of R1 is our new in-house Ascent drive unit, which offers extremely high performance at much lower cost. And so that is a benefit that customers will be seeing, so great for us. In the quad motor configuration, the Ascent drive unit delivers 1,025 horsepower, 0 to 60 miles per hour in less than 2.5 seconds, and achieves the quarter mile in less than 10.5 seconds. The tri-motor Ascent configuration outperforms the first generation of quad motor configuration in acceleration. So, one fewer motor, but, outperformance now. So that technology is being improved over time. In acceleration, torque, and range, and costs approximately 32% less to manufacture because there's one fewer motor there. So that does make sense. And then here, looking at this last bold point here, drive towards profitability. The second generation of R1 incorporates engineering design changes, commercial cost improvements, and raw material savings that improve profitability and confidence in our positive fourth quarter gross profit target. Beyond 2024, we are planning to further profit improvement driving by reducing material costs, leveraging our fixed cost due to anticipated R2 volumes, and scaling our revenues per delivered unit through product mix and pricing, software and services, and other revenues. And so we want to thank our employees, customers, suppliers, partners, communities, and shareholders for their continued support of our vision. And I have to say that we are excited to be here. And yeah, I will continue scrolling down. This looks like, some pretty cool chips, whatever. This is, I don't really know enough about this stuff, but, let's see, scalable technology. And this letter to shareholders is pretty long, so I don't think I'll be able to finish it in the next 19 minutes before the call starts. But I will go back to their website and take a look to see if they have the earnings report released there. But yeah, so let's see. And Antoine's saying, I don't know price, but the cars, yeah. I mean, for me, as far as buying an EV, too pricey for me right now, especially Rivian. But that price will come down over time. I'm just responding to Antoine's comment. And the trucks look good from them. And yeah, I mean, for me, I saw a truck go by my place yesterday, a Rivian truck. I turned maybe it was 2 days ago. I can't remember. I think it might have been 2 days. I can't remember. But yeah, I turned my head to look at it and it's like, yeah, it's looking good. And I have to say that I believe it's the is it the R3, the little car? I find those to be really intriguing. I like all of their vehicles. I think that they're very nice overall. So yeah, but I'm gonna check back on their website to see if we've got some new information here. There's a letter to the shareholders, and so I might click on this link to the webcast. I've already got that pulled up. So yeah, I guess this is the what we're going off of in getting ready for the call. But anyway, so looking at scalable technology. So from the beginning, we have taken the approach to vertically integrate certain key areas of the vehicle. And our focus for vertical integration has been to provide an enhanced customer experience as well as more holistically optimized and structurally advantaged vehicle costs. And our in-house technology includes, again, like I said, a technology company, not an EV company. So propulsion. We develop and build our drive units, battery management systems, and high nickel battery packs. These technologies allow us to offer high performance systems at lower cost to Rivian. Autonomy. Our in-house approach to autonomy reduces our costs and increases our development speed. Sorry, Luminar. For instance, we were able to quickly develop lane change on command through tight integration of sensors, hardware, software, testing, and simulation. By having a holistic approach to developing autonomy, our learning transfers unencumbered to every layer of the stack, improving our velocity and user experience for the next step of features. Here, the next bold point is electrical hardware. We internally develop and design the electrical architecture within our vehicles. Our zonal architecture enables us to minimize the number of electrical control units, or ECUs, in the vehicle. And we have between 5 and 10 times fewer ECUs when compared to traditional vehicles. And this also enables us to fully control our software stack, which is paramount to delivering a vehicle with customer features that are constantly improving. So they do in-house over-the-wave, over-the-air updates. I imagine, like Tesla, we've heard a lot about that over the years. And also, on other companies having issues with that, we can say that, Fisker had attempted to do that and they really kind of failed. MBKHD went over that, which was fairly disappointing at the time. But, I think that Rivian is just, leagues ahead of where Fisker was, or, a lot of EV companies that are, still fledglings. But here, so let's see, before I went on that tangent, where was I? Let's see, the second generation of R1 network architecture and topology of ECUs will have significant overlap with our future mid-size platforms, or MSP vehicles. And so just noting here that I believe these are the chips they're referring to. These are the in-house chips that they have. There aren't too many on the vehicle, whereas I think referring to either, I imagine not other EV companies, but more conventional or internal combustion engine vehicles have just rather than a concentration of chips, or like one chip here, one chip there, they have like 5 chips in one area. And that also might be that let's say a Ford is producing a vehicle. A notable way of vehicle companies making money is by repairs and stuff like that. So if there are chips all over the vehicle, if there are 20 chips around the vehicle, one of them fails, you got to take it into the shop, and then they can make the money. But I think that EV vehicles are really kind of changing the landscape of personal vehicles, in that they are, consolidating a lot of stuff, consolidating the cost, and that makes it more affordable to the customer, and that is, going to change the landscape of, our personal driving habits, that we will be choosing to go EV over ICE. And here, let's take a look. The next one down is software. And because we develop the vast majority of our software, the vast majority, not all, we can continually improve features and capabilities with a primary focus on providing a superior customer experience. And the software architecture that has been intentionally designed to be scalable and modular, with multiple abstraction layers to facilitate application across varied hardware configurations. So that would be, the variety of vehicles that they have, or if, somebody wants a quad versus a tri-motor configuration, stuff like that. All of these core technologies, which underpin the second generation R1 vehicles, have been designed to be scalable across vehicle platforms and set the foundation for the technology we plan to introduce in MSP vehicles, expected to launch in the first half of 2026. I believe that's the R3, but I might be mistaken in that. Or, but yeah, they had the car. I forget what number that was. I think it's the R3. Too many numbers. And one thing, I'm going to switch over to here. Looks like it says live over there behind Ed. I'll hide Ed for a second so you can see it. And so I might plug myself into the audio so I can hear what's going on. And then once the call starts in about 12 minutes, the RIVN call, I should say, then I will unmute the audio. And then we can, listen to the call together as I take notes and whatnot. See, I'm just going to plug myself into this. So it is just music. And I have to say, I was listening to it as I was setting up the stream. Their music is very, it's like a 2-minute long song. And, it can be kind of, some parts of it are very nice, but other parts are not so nice. But anyways, I'm listening to it, so I'll connect us when that call starts. I'm just going to flip back over to the chart so we can see that. And yeah, it's kind of like, I wonder what's going to happen. Is this going to continue to come down lower here, or are we going to start to see it take off? Either way, I'm happy to get more shares if it comes down. Also, just before the market close, kind of exploring unusual whales, getting more familiar with it, learning by mistake, really. I did buy a put that expires not this Friday, but next Friday. If I make money on it, that's great. And then I'll also get more shares as price goes down. But if it, price goes up, that's great. I'm holding some shares, so it doesn't matter. So I guess that's somewhat of a hedge, but really it's just me getting more familiar with unusual whales and assessing the risk profile that I'm interested in. And part of that was, rather than buying a call or put that expires this coming Friday, I gave myself a week buffer for next Friday. But, I may very well lose money on that. The strike was $13.50. So we'll have to see where price goes. But yeah, holding shares, and, this is a company that, I've always, marveled at. So pretty excited about them. Here, this is just a beautiful vehicle. I like the wood paneling and stuff here. Or wood pattern. I don't know if it's actually wood, but it's just beautiful. And then, so yeah, let's check out this news on the planned joint technology joint venture with Volkswagen Group. And so here we recently announced plans to form an equally controlled and owned joint venture to create next generation electrical architecture and best-in-class software technology. Underpinned by the vision of the strategic partnership, Volkswagen Group made an initial investment of $1 billion into Rivian, with up to $4 billion in planned additional investment for a total expected deal size of $5 billion. As you know, 1 plus 4 does equal 5, so it makes a lot of sense there. But this deal is subject to the formation of the joint venture, which it sounds like they're still in negotiations about it. And so Rivian and Volkswagen Group executing definitive, subject to the formation of the joint venture, Rivian and Volkswagen Group executing definitive agreements, the achievement of certain milestones, and the receipt of regulatory approvals. So, that does make sense. We believe this announcement reaffirms the strength of our vertically integrated technology platform, and our collaboration is expected to substantially expand the market applications for our software and associated zonal electrical architecture. Rivian's proven electronics and software platform is expected to serve as the foundation for future software development in the partnership. And so from the very beginning, we have made an intentional effort to own the ECUs and software in the vehicle. The vertical integration of our hardware and software platforms equips us to seamlessly incorporate new features and enhancements that improve the customer experience, such as over-the-air, over the ether updates. And so by using customer feedback and cloud data, our over-the-air technology can update and enable improvements across the entire vehicle architecture, including vehicle dynamics, battery management, thermal management, body controls, autonomy, and digital experience for the driver. And we got about 8 minutes before it starts, and just ads pop up, but I try to make them go away because I don't want to disrupt the flow. And so our hardware architecture also has flexibility and designed to flex across multiple vehicle configurations, from affordable mass market vehicles to premium vehicles. Preceding this was our transition from our first generation to our second generation architecture, which was built to fully deliver on our vision of flexibility. And so the lead program for this joint venture is expected to be our R2 platform, with an expected start of production during the first half of 2026. Again, these are investments, not next month, not next week, years from now. And so while the zonal electrical architecture and core software technology developed in the joint venture will be common across vehicle programs, R2 and other Rivian vehicles will continue to have Rivian's highly differentiated user experience and interface, and will benefit from our vertically integrated propulsion, high voltage, and autonomous driving systems. And so here, these are some media highlights. I may skip over them because, we can read these in the media. And here, this is, I think just a beautiful photo of a family and putting the boat out in the water on vacation. It looks really nice. And here, kids enjoying the beautiful sunroof. I don't know what that's called exactly. And then here, the display there. So it just looks really, really nice. And so I'll continue with this. But I am going to check the chart, and we will have to see what's going on. So, really not too much craziness going on with either stock. Rivian, we did see, initially a pump up to 1538 right after the market closed, but then we saw kind of this multi-leg downward move down to a low of 1318 in the after hours, but now we're consolidating up here around 1440, 1450. Currently down about 2% in the after hours, trading around 1448. If we look over at Luminar, just barcoding, super boring. This is on the minute time scale. Is there going to be some volatility in it? And, I have to say this is probably why the options table, not just because price is around $1, but because there's just there's not enough going on with Luminar. But, with that being said, I feel like Luminar is kind of in an earlier stage of development than Rivian. And I should note market caps, Luminar is around 626 million, whereas Rivian, if we look at their market cap, 14.73 billion. So yeah, I mean, we're looking at two very different companies as far as their stage and valuation and their development and stuff. But yeah. Get about 4 minutes before the call starts. I still just got the music in my ears, so don't worry about that. And so I might, just since there are just minutes left, I might kind of just scroll through this document, 28 pages, and we're on page 8, so I might just scroll through to look at the beautiful images that we see here. All right, here, this looks like some motors. They're being manufactured, so just looking pretty beautiful there. Very cool. In-house motor family. Yeah, I was right in calling that a motor, not an engine, because these are not ICEs. These are, electric motors, dual, tri, and quad motors. All great options. Just with the dual motor, you can get from 0 to 60 as quick as 3.4 seconds for the performance variant. So, it's something to note there. But yeah, I mean, 3 seconds. I've never experienced something like that. Or, if you do the quad motor, you can get from 0 to 60 in less than 2.5. Tri-motor, 0 to 60 in 2.9. So, I've never experienced any of that. And really just the difference between 2.5 to 3.4, I don't know that I really noticed a difference. Either way, it would be, just kind of mind-blowing to me. And yeah, some more factory stuff, pretty cool shot here, a bird's eye view of the kind of assembly line of those motors. And here, I'm not sure what this is producing, but something there. Total cost of drive units, it has been continually going down, so that's great. Or continually, these are, it's the cost, not continually going down, but that's the, for the different drive units. So it's cheaper for this one versus the Origin Quad. Let's see. But yeah, the best performer is the Ascent Quad, which is actually cheaper than the Origin Quad. So that's interesting. And then, so yeah, Gateway to Yosemite. I don't know if any of you have ever been to Yosemite. Beautiful park, although, the valley is always making me think about it just being a parking lot rather than a park. But with that being a parking lot, they got to have their EV charging stations, and you can see not only this, Rivian charging hub, whatever this would be. Maybe it's a restroom there, I'm not sure. But we got the Rivian charging stations back there with that nice, beautiful orange logo there. And so go-to-market operations. I'm just going to skip through this stuff since we're starting the call in just a couple minutes. And so, we're going to go over all of this stuff, the EBITDA and whatnot during the call, so I don't feel like we're missing out on too much there. Financial highlights. We'll also be going over that stuff during the call. So not much to miss there, as we'll be getting, word from the CFO. And I'm just going to keep scrolling, see if there's any stuff that really stands out here in this report. Here's the link to the webcast, or the information on the webcast, and so that's going to be starting in just about 1 minute. Tables. Let's see, got about 10 more pages. I'm just going to go through this super fast so we go through all of it together. Oh my gosh. Rapid speed. Can we get through 20 pages in 2.5 seconds? I don't think so. But we can go from 0 to 60 with their vehicle. So tables, text, and let's see, one more page. That's a nice one to end on. That's a beautiful truck. Pikes Peak looks pretty nice. 21 in the sun. All right, so I'm going to get back over to here, and I'm just going to refresh this to make sure that it's still good. Okay. And once the audio does turn on, I will mute myself and I will turn on the audio. If you guys do have any issues with the audio from the call, let me know. I can adjust the sound, but it should be good. I just have to unmute Chrome's volume. But here, looking at the chart, again, not too much, right around 1445, 1446 in the after hours, and Luminar now being down a little bit, barcoding around. Music got quiet, but that's just that part of the song. So, the call will be starting in any second now, really, because I do have the time as 5 p.m. Eastern right now. So, we will see. Still just going, and just in case you guys are antsy about it, I'm going to make Ed take a little break. You can see in the corner over there, we are live. Nothing going on with the call, and I am actually going to refresh it. But you might notice it says 4 p.m. up there. That is because I am in the Midwest Central Time. Oh, and I'm going to click on this. Still just the same, man. But yes, what I need to do now, take the display off. We got that up there. That is you guys being connected to Chrome, and we got the chart here. And so let's see what's going to happen. And I should note, I guess these lines that are drawn here, they're drawn based on the daily time frame. And at the end of this stream, I will be recording live videos on not only Rivian, but also Luminar. And then I will edit those videos after I get the timestamps to this stream. And then those videos will be released later tonight, so you guys can kind of get my thoughts moving forward on both companies, on both stocks, or really, really just on the stocks, because I do mainly technical analysis. But both companies, I feel really good about them moving forward into the future. I think that they seem like great investments. So, yeah, lots of upside potential there. I just heard a little chime, so call starting. So I'm going to turn my mic off.
Time, all participants are in a listen-only mode.
So
Please
let
be
me know if
advised
the
that
volume needs
today's
to be turned up
conference is
or
being
down, but it
recorded.
should be good.
After the speaker's presentation, there will be a question and answer session. To ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. I would now like to hand the conference over to your speaker today, Tim Bay, Vice President, Investor Relations.
Good afternoon, and thank you for joining us for Rivian's second quarter 2024 earnings call. Before we begin, matters discussed on this call, including comments and responses to questions, reflect management's views as of today. We will also be making statements related to our business, operations, and financial performance that may be considered forward-looking statements under federal securities laws. Such statements involve risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are described in our SEC filings and today's shareholder letter. During this call, we will discuss both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP financial measures is provided in our shareholder letter. Just before the call, we published our shareholder letter, which includes an overview of our progress over the recent months. I encourage you to read it for additional details around some of the items we'll cover on today's call. With that, I'll turn the call over to RJ, who will begin with a few opening remarks.
Thanks, Tim. Hello, everyone, and thanks for joining us today. During our call, I will highlight key developments in the second quarter and provide an update on the progress we're making against our value drivers. Prior to discussing quarterly details, I want to reinforce the key messages conveyed in depth during our recent Investor Day. To achieve the full potential of our vision, we need to aggressively drive towards profitability. The fundamental levers underpinning this goal include the recent transition to our second-generation R1 and the subsequent introduction of our midsize platform, which underpins R2. I'm encouraged by the progress ramping up our second-generation R1 vehicles, as well as developing R2, which we expect to launch in the first half of 2026. The ability to dramatically reduce cost in a condensed time frame and drive continual improvement in the customer experience is based on our intentional approach to vertical integration. From the beginning, we have vertically integrated certain components of the vehicle, driven by the desire to create superior customer experiences and deliver long-term structural cost advantages. The success of this is demonstrated by a recent J.D. Power appeal study, where Rivian received the highest score and the most satisfying brand across the automotive industry. We spent years developing key technologies such as our software, electrical hardware, autonomy, and propulsion. The significant cost and performance benefits from these technologies gives us confidence in our ability to continue developing and building highly desirable vehicles across the R1, R2, and R3 product lines. As a testament to our industry-leading technology platform, on June 25th, we announced the expected joint venture with Volkswagen Group. The announcement validates our technology platform and is expected to substantially expand the market applications for our software and associated zonal electrical architecture. Rivian's proven electronics and software platform is expected to serve as the foundation for future software development in the partnership. The technical workstream to prepare the integration of our electrical architecture and software technology stack into Volkswagen Group products is moving along very well, and we expect to close the joint venture in the fourth quarter of this year. As the auto industry transitions to smarter, more connected, more complex, and integrated vehicle architectures, we strongly believe our technology is best positioned to deliver a modular and scalable platform that will help create highly compelling products and services that we expect will accelerate consumer shift to electrification. I also want to take this opportunity to acknowledge our team, who has continued to execute on our second generation R1 ramp of production and deliveries, R2 development, and the formation of our joint venture with Volkswagen Group. During the second quarter of 2024, we successfully completed the retooling upgrade in Normal. This was a pivotal operational event for the company. The upgrade introduced new technologies and cost-focused material changes into the R1 vehicle platform, while also incorporating manufacturing process improvements that are expected to improve cycle time, utilization, and cost. For example, we have reduced complexity and lowered the costs associated with the vehicle body, with a heavy emphasis on removing parts, processes, and steps. These changes have reduced nearly 1,500 joints and contributed to an expected 30% improvement in the R1 production line rate. Following completion of the retooling upgrade, we resumed production and are encouraged with the early progress of ramping our second generation R1 variants. The new R1 vehicles have hundreds of design, engineering, and performance upgrades, with the most significant being an entirely new zonal architecture, new compute and autonomy platform, new in-house drive units, and a re-engineered suspension system. The introduction of the second generation R1 platform, combined with commercial cost downs and commodity tailwinds, are expected to enable significant material cost reduction. Importantly, I want to emphasize there is more to go. We are focused on reducing R1 costs beyond 2024 through lower material costs and conversion costs. As we continue to source materials for R2, we are seeing opportunities to further reduce the cost of R1 through additional supplier cost reductions. In addition, we believe the expected joint venture with Volkswagen Group will allow us to achieve more favorable pricing from suppliers. This includes components, chipsets, printed circuit board assemblies, and all the associated content that relates to those hardware systems. I want to delve in further on our new second generation drive units, which represent a significant change in capability and cost. The second generation R1 includes our Ascent motor system, which underpins our new tri-motor and quad motor. These motor configurations, in addition to our dual motor released in 2023, mean all motors on all Rivian vehicles are now designed, engineered, and manufactured fully in-house. The 850 horsepower tri-motor variants are expected to start deliveries towards the end of the third quarter. The tri-motor variant is equipped with 2 Ascent motors in the rear and 1 Enduro motor in the front for a blend of exceptional power and range. The tri-motor R1T delivers 0 to 60 miles per hour in 2.9 seconds while offering an estimated range in conserve mode of approximately 400 miles. The quad motor is designed for peak adventure with 4 Ascent motors. The quad motor delivers 1,025 horsepower, 0 to 60 in less than 2.5 seconds, and achieves the quarter mile in less than 10.5 seconds. Feedback on our second generation R1 has been very positive. It is a fundamentally better vehicle while simultaneously costing less to build. We're excited to get more of our second generation products to customers and available for demo drives in the coming quarters. At Rivian, we wake up every day thinking about ways to make our products better. This is based on our sense of urgency in transitioning the world towards a fossil fuel-free future. This is possible by creating products that are deeply exciting to consumers, products that carry attributes and design characteristics that pull people out of internal combustion vehicles because they're experiencing something that isn't just better for the environment, but also really enjoyable and desirable to use every day. I would like to thank all those who continue to support our vision, including employees, customers, partners, suppliers, communities, and shareholders. With that, I'll pass the call to Claire.
Thanks, RJ. During the second quarter of 2024, we made significant progress driving greater cost efficiency, further strengthening our balance sheet, validating the differentiated nature of our technology stack, and establishing new business opportunities. During the second quarter, we produced 9,612 vehicles and delivered 13,790 vehicles, which represented the primary driver of the $1.2 billion of revenue we generated. As expected, second quarter production was impacted by plant downtime associated with the retooling upgrade. Our deliveries were strong as we sold through the majority of inventory of our first-generation R1s. Due to strong Q2 performance, which led to our lower starting finished goods inventory balance and the continued ramp of production throughout the third quarter, we expect our third quarter deliveries to be below our second quarter results and production volumes to be in line with our first quarter levels. Total gross profit was negative $451 million. Our gross profit loss per vehicle delivered was approximately $33,000, which includes approximately $15,000 of depreciation and amortization expense and $1,200 of stock-based compensation expense. In addition, we incurred approximately $2,400 per vehicle delivered in the quarter related to our cost of revenue efficiency initiatives, which we do not anticipate being part of our long-term normalized cost structure. We expect to see significant cost reductions in our R1 platform during the second half of 2024 as we ramp the production and deliveries of our second-generation R1 vehicles. Additionally, the reduction in our LCNRV write-down for the quarter compared to Q1 2024 reflects the progress we are making in association with our material cost reductions and operational efficiencies associated with our second-generation R1 vehicles. We remain confident in our path to deliver modest positive gross profit in the fourth quarter of 2024 and for the full year of 2025. Importantly, our team is already focused on driving incremental cost out of our R1 platform to help achieve our long-term gross profit target of 25%. The key drivers of our long-term R1 profitability include reducing material costs, leveraging our fixed costs, and scaling our revenues per delivered unit through product mix and pricing, software and services, and other revenues. During the second quarter, we also announced the intention to form an equally controlled and owned joint venture with the Volkswagen Group to create next-generation electrical architecture and best-in-class software technology. In association with this deal, Volkswagen Group have made an initial investment of $1 billion into Rivian, with up to $4 billion in planned additional investments for a total deal size of $5 billion. The incremental investments are subject to the completion of definitive agreements, the achievement of certain milestones, and the receipt of regulatory approvals. Assuming all criteria are met, we expect that the full $5 billion is intended to flow to the benefit of Rivian. In addition to the $5 billion of capital to Rivian, we anticipate incremental benefits through cost savings on materials, operating expense efficiencies, and future revenue opportunities associated with the joint venture. The initial and planned investments by Volkswagen Group, in addition to our cash equivalents, and short-term investments, are expected to provide the capital to fund Rivian's operations through the ramp of R2 and Normal, as well as the midsize platform in Georgia, enabling a path to positive free cash flow and meaningful scale. As RJ mentioned, we expect the deal to close in the fourth quarter of this year, and we will provide additional details at that time. During the second quarter, we improved our cash flow from operations by 41% as compared to the first quarter of 2024. This improvement is reflective of our continued focus on cost and greater working capital efficiency across the business. As compared to the first quarter of 2024, we reduced our gross profit loss per vehicle by approximately $6,000 and made progress on reducing our gross inventory balance. We believe these trends will result in further improvements in our cash usage for the second half of 2024. As we look ahead, we are reaffirming our 2024 production guidance of 57,000 units, delivery expectations of low single-digit growth as compared to 2023, EBITDA guidance of negative $2.7 billion, and capital expenditures of $1.2 billion. As a reminder, coming out of the retooling upgrade, we are currently operating the R1 line on a two-shift operation, which results in 56,000 units of annual run rate output. Our commercial van line is currently running on a limited one-shift operation, which has the potential to deliver a run rate annual output of 15,000 units. As we look ahead for 2025, we expect that our Normal facility will not be producing vehicles for more than 1 month during the second half of the year as we upgrade and integrate new equipment into the plant ahead of our first half of 2026 R2 launch. We continue to see a clear path to long-term approximately 25% gross margin target, high teens adjusted EBITDA margin target, and approximately 10% free cash flow margin target. I wanted to again thank our team, partners, customers, suppliers, and shareholders for the tremendous support. With that, let me turn the call back over to the operator to open the line for Q&A.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please limit yourself to one question and one follow-up. One moment for questions. Our first question comes from George Gianarikas with Canaccord Genuity. You may proceed.
Hi, good afternoon, and thank you for taking my questions. Maybe just to start, can you just please talk about your geographic strategy, particularly in Europe, in light of the recent VW relationship?
Thanks, George. As it stands today, the R1 products are being sold throughout the United States and Canada, and our EDV products are primarily our commercial van products are primarily focused in the United States, but we have made some deliveries in Europe and specifically in Germany. Now, with regards to our future products with R2 and, of course, R3, those have been developed really at their core to fit not only the U.S. market, but to also fit the European market. And you can really see it as you look at the R2, R3 combination of what we believe capturing a sweet spot in terms of both addressing demand for midsize SUVs in both U.S. and European markets, but also with R3 capturing a smaller crossover market. And so, as you've heard us talk about many times, this is one of the things we're so excited about with the R2 platform is just the growth in the addressable market for us as a business.
Thank you. Maybe as a follow-up on the VW relationship, I know you're still working through the details. You mentioned that. But is there any update on the potential to transfer some of your OpEx into that JV? Thank you.
Yeah, as you said, we haven't announced the specifics around the joint venture, inclusive of any of the associated cost sharing. But I think importantly, I'd want to call out is how this relationship was formed, and it's really formed on the basis of leveraging the technical platform that we built around our network architecture, our topology of ECUs, and of course our software stack, and allowing and enabling that technology to really scale well beyond Rivian's product line and to enable us to get to global scale across multiple markets very quickly. So we're ecstatic about the impact that can drive in terms of helping to create exciting products that give consumers choices to move towards electrification. We're also excited about the scale that provides us from a sourcing point of view and a supply chain point of view as we think about the components and the assemblies that go into those systems.
Thanks.
Thank you. Our next question comes from Mark Delaney with Goldman Sachs. You may proceed.
Yes, good afternoon. Thanks very much for taking the questions. First, I was hoping to better understand how the company is tracking toward the target of positive gross margin in the fourth quarter, and have the drivers changed at all, especially as we've seen things like a 2.99% incentive that you're utilizing and perhaps that changes the mechanics to the positive gross profit bridge?
Thanks, Mark. There are still three key drivers to our path to positive gross profit in Q4. The first is the variable cost improvement. We spent a lot of time at our Investor Day talking about the material cost reduction roadmap associated with our new Gen 2 technology introductions, material cost reductions that we've had through supplier negotiations, as well as the commodity cost tailwinds that we anticipate seeing throughout the course of the second half of this year and into 2025 as well. The second driver is our fixed cost leverage, and this is enabled by the retooling upgrade that we had in Normal, which has improved our production line rate by approximately 30%. And this, together with the increased Q4 production volumes we anticipate seeing, as well as our reduction in depreciation expense across the business, will help drive this fixed cost leverage. And the last key driver for us, as we've talked about in the past, is an increase in revenue per delivered unit. And this we'll see through the introduction of our tri-motor R1s that you heard RJ speak about in his prepared remarks, as well as non-vehicle revenue growth from the sale of regulatory credits and the introduction of our pre-owned Rivian sales. We continue to remain confident in our path to positive gross profit in Q4. And it's important to note that our Q2 results had very limited sales of our Gen 2 vehicles. So you're not actually seeing any of the flow through of the improvements that we've made throughout our production line or our material costs yet flow through the results themselves as we look at the Q2 actions as a whole.
Thanks for that, Claire. My second question was how to better think about the material cost improvements you're looking to achieve, such as the 20% for the dual motor large pack second gen R1 compared to the first gen. I think those cost improvements did not incorporate some of the potential savings you think you may be able to realize now that you have the VW news out there and some of the response you've seen from suppliers. So I realize it's still somewhat early, but can you share a bit more on the magnitude of potential material cost improvements you may see as you're able to execute on some of that expanded opportunity? Thank you.
Yeah, thanks, Mark, for the follow-up. You're absolutely right. There's the 20% that we've referenced in cost reduction on the bill of materials for a like-for-like vehicle. That's based upon technical changes we made to the vehicle and supplier negotiations that we drove over the last 18 months. There's certainly more room to go in terms of applying some of the leverage that we're going to see, not only with the relationship we're building with Volkswagen, but also with the scale that comes with R2. And so we do see continued progress as we drive towards the long-term goal of 25% gross margin for our normal facility. And it's these continued cost efforts that we're talking about here around reducing our bill of materials. We also see improvements happening in our conversion costs at the plant, and those conversion costs are both the continued progress around efficiency improvements within the plant, but also over time the enhanced fixed cost leverage that's going to come from bringing R2 to production to be produced in normal as well.
Thank you. Our next question comes from Philippe Houchois with Jefferies. You may proceed.
Yes, good afternoon. Thank you very much. A couple of questions for me. One is very little mention of EDV in the release. Could you give us an update on how your customer trials are going on and might have a kind of an idea of when you might have first customers outside of the Amazon deal?
Thanks for the question, Philip. The EDV program is something that for us is we're really excited about. The impact of it in terms of reducing carbon emissions on a per mile basis is outstanding over internal combustion vehicles. And we've been able to really prove the robustness of the platform and the strength of the offering through our relationship and partnership with Amazon. And having a large deployed fleet of these before we started running the pilot programs we've talked about in the past with non-Amazon customers was really helpful as we refined not just the vehicle, but also the software surrounding the vehicle. And so as we've talked about in the past, we're over the course of this year, we've been running pilots in anticipation of more significant ramp up in 2025. And this focus on pilots is really reflective of the nature of this business, where these are large decisions around large numbers of vehicles for a lot of these bigger fleets. And it's appropriate that we build effective working models for how the vehicles are serviced, what digital support the vehicles have, what infrastructure changes are necessary for each respective fleet. It's a lot different than adding a single charger in your garage when you buy an R1. When you're thinking about adding many chargers and a lot of new power into, let's say, a fulfillment center, a distribution center, or an operating center, if you're a business that's running 20, 30, 40, 50, maybe 100+ vans out of it. So these are great learnings that we've been driving off the basis of what we put together with Amazon. And we are looking forward to starting to talk about other customers beyond Amazon.
Right. Thank you very much. If I can squeeze another one. On this Volkswagen relationship, did I understand correctly, you expect it to close in Q4, and at that point, you will disclose, to the extent you agree with Volkswagen, you will disclose the terms of the JV, and we might be able to get a lot of questions around the accounting and the JV and how much of the cost might be shared with the JV between Rivian. Will we get that information in the fourth quarter?
Yes, exactly. So we'll be filing the definitive agreements associated with the Volkswagen Technology joint venture once the JV is closed, which we anticipate being in Q4 of this year, and we'll provide additional clarity on some of the financial impacts of the JV to Rivian's longer-term financial forecast and trajectory. As RJ pointed to, we do anticipate seeing beyond the capital that the Volkswagen Group will provide incremental benefits, including material cost savings, operating expense efficiencies, and future revenues associated with the joint venture.
Great. Thank you very much.
Thank you. Our next question comes from Dan Levy with Barclays. You may proceed.
Hi, thank you for taking the questions. Wanted to go back to Mark's question earlier, and maybe you could just help us unpack some of the ASP dynamics in the quarter, because we know that there was some discounting that you needed to use to clear out some of the old inventory. And wondering really what how we should think about the right starting point for where you were on an ASP perspective in the second quarter, if we forget about some of those discounts, and just based on what you're seeing, I believe you need to hit flat ASPs from where you were in 1Q to hit the gross margin. So just anything on the right way to look about ASPs and the discounting needed for your targets.
Thanks, Dan. The challenge with introducing an update or a second generation to a product, while still, of course, producing the first generation, is always in exactly what you just referenced, which is it's not as if we stop production, immediately start production, have no inventory in the system. So there's inventory of our Gen 1 vehicles. And we did have some attractive pricing on some of those variants of our Gen 1 vehicles to essentially, as you said, clear them through the system as we then start producing and delivering our Gen 2 vehicles. We don't look at that as a long-term shift in pricing, but rather reflective of the step change we've seen in the Gen 2 vehicles in terms of performance and capability. And we've been very clear in just talking about the differences between the vehicles. And we're really pleased with the results that we saw in Q2. You saw the number of deliveries exceed production by quite a bit, and that was really the burn down or burn through of the Gen 1 inventory. Now, in terms of ongoing expectations for ASP, the other thing I'd want to call out here is that with the introduction of the Gen 2 vehicle, Claire referenced this, but we have a tri-motor and we have a quad motor, and the quad motor performance is extremely high. It's a big step forward relative to our first generation quad. Acceleration is a lot quicker. The range and efficiency is improved. The thermal performance particularly for off-road, really intense driving is outstanding. And that allowed us to move the quad motor up market and the tri-motor to really occupy the price position and the price space where we saw the first generation quad operate. And so that was very intentional. And the goal was between the dual motor, the tri-motor, and the quad motor to create a wide band of pricing, starting at just over $70 and going up, over, well into, over $100,000. That allows us to not only offer vehicles to folks that are very price sensitive, but also to give products to customers that want the best of what we can build. And so those changes happening at the drivetrain level certainly help maintain ASP. But importantly, we also have a new trim package that we've just launched, which is a more premium trim from what we'd originally had. We call this the Ascent trim. But this trim package, which is built into the tri and the quad motor configurations, is another element of providing customers with a variant or a choice that is at a higher price point, but of course, delivering more content and more features.
Maybe just adding a couple of additional points of color back to prior comments that we've made in the past. In our Q4 earnings call, we had said that we expected that our ASP, for the vehicles themselves would be consistent Q4 of 23 relative to Q4 of 24. We still expect that to be the case as we sit here today. And then the other point, as we think about the seasonality of the business, is consistent with Q4 of last year. It's far more indexed towards R1 sales relative to commercial van sales, which in aggregate lifts the overall revenue per delivered unit because of some of the Amazon-related seasonality that we expect to continue to be the case in Q4 of this year. And then back on RJ's final comments, we'll have sales of our tri-motors in Q4, which will allow us to stretch up the higher end of ASPs to complement our starting price point, which is still $69,900 for our standard packs for R1T.
Got it. So it sounds like there's some positive mix assumptions in there. Thank you. Just as a follow-up, I wanted to go to the VW investment and wondering, from the fact that you got this money in what I think many of us consider to be a more sort of efficient manner than going through the capital markets, what does this allow you to do from a product plan or capacity perspective that previously wasn't, on the table if you were going to be fully reliant on the capital markets?
A really important part of what this deal represents for us is it really eliminates a lot of the risk that was seen around our balance sheet and allows us to focus the launch of R2 still using our normal facility. But as you've heard Claire and I both talk about as part of our Investor Day, not only have the balance sheet to support launching R2, but also the balance sheet to support taking us through positive cash flow. And we recognize the importance of that focus on driving efficiency into the business, both in terms of how we operate the business, but also in terms of how we deploy capital from a CapEx point of view and an investment point of view. And the organization is hyper-focused on driving towards profitability and hyper-focused on the launch of R2 and what that represents for us in terms of the scaling that comes with it.
Great. Thank you.
Thank you. Our next question comes from Joseph Spak with UBS. You may proceed.
Thanks. Good afternoon. RJ, maybe you could just dive a little bit more into what is exactly happening in the plant and what's impacting the R1 line, R2 work doing next year. And then Claire, can we expect that the R1, given that most of the changes are already done, can ramp back up pretty quickly so we could understand the shape of gross margins next year? Because it sounds like you guys are planning for maybe some sequential improvement until that downtime, maybe a downtick in the third quarter and then a recovery in the fourth quarter. I just want to make sure that's we're properly calibrated there.
Sure, Joe. Yeah, so as we think about the operations next year, this is looking at 2025. We've said we're going to be taking the plant down for roughly a month while we make some of the changes necessary to integrate the R2 production into the plant. Some of that work has already happened. We did some of the preliminary work in the most recent shutdown in conjunction with the move from Gen 1 to Gen 2 on our R1 platform. But the shutdown that's going to happen in the second half of next year will make the splicing together of certain parts of the plant possible. That's part of our plan. We'll be working around that, but as we did with the Gen 1 to Gen 2, we wanted to provide very early guidance around this and make sure expectations were appropriately set for what will have to happen in the plant next year to integrate R2.
And then based off of the second part of your question as well, given the shutdown, there will be some choppiness to the financial results as we look through not just a quarter sequential improvement in our results as we look at the gross margin trajectory. As I mentioned in my prepared remarks, we still maintain that we'll have a modest positive gross profit for the entire year of 2025 in particular, but certainly with the shutdown itself in the second half, we'll feel some of the impacts of lower absorption of labor overhead and depreciation like we experienced in Q2 of this quarter, given the lower production volumes that we had in the normal facility itself. But to RJ's point, more akin to the November shutdown that we had to do some of the pre-work for our Q2 shutdown, we were able to get right back up to line rate based off of the aftermath of that shutdown. So we expect we won't see as sort of staged of a ramp back up from a production standpoint, given the fact that we'll have already ramped up our supply chain, which is one of the gating factors as we've gone through the course of ramping up new technologies in our redesigned Gen 2 product.
Okay. Thank you for that. And as a second question, I don't know if you guys really ever, you certainly don't talk about it this way. I'm curious if you ever look at it or think about it this way, but you call out some of the impacts to the gross loss per vehicle from stuff that's not in the cost structure this quarter. I know that's offset a little bit by regulatory credits, but if we also take out DNA and stock comp, it seems like you're actually much closer to a cash gross profit break even level. Is that something that directionally is correct? And it seems like if that's true, you would actually even hit that before you would hit your your modestly gross profit positive number in the fourth quarter.
Yeah, Joe, that's absolutely right. And we wanted to call out in my prior prepared remarks just the impact. We had roughly $15,000 of depreciation per unit, $1,200 of stock-based comp per unit, and then another roughly $2,400 of other cost of revenue initiatives in the quarter. So that was roughly $14,000 of loss per unit if you make those three respective adjustments. So we certainly would anticipate hitting sort of a cash break even prior to positive gross profit.
Okay, thank you.
Thank you. Our next question comes from Alex Potter with Piper Sandler. You may proceed.
Great, thanks. Claire, just a quick one following up on that last question. These, I guess, quote unquote, other initiatives, the $2,400 a unit, just in layman's terms, what is that?
So in layman's terms, the way I would characterize it is, as you can imagine, with the significant changes we made in suppliers, with the introduction of swapping out roughly half of our material cost as we move from Gen 1 to Gen 2, there are certain costs associated with contract modifications or amendments that we've made, and that's largely what is reflected there.
Okay, very good. I guess my second question is on the Volkswagen joint venture. So presumably, I know you've got yet some work to do when it comes to hashing out the financials and all of these things, and we'll await information on that in Q4. But in the meantime, presumably you've got engineers, you've got procurement people who are sort of eager to start doing something, design or getting better supplier negotiations underway. Are they basically being instructed to sit tight and not do anything until the ink is dry, or are they allowed to sort of go out into the world and start, I guess, restarting supplier negotiations, for instance, with the heft of Volkswagen behind them, or working collaboratively with Volkswagen engineers to actually design the platform into Volkswagen vehicles, or do they basically just have to sit tight?
Yeah, from a supplier point of view, we absolutely are already seeing some of the tailwinds associated with our Volkswagen joint venture and partnership. This is, you can imagine, at the component level and at the electronics level within the vehicle, where we see a lot of the suppliers we have long relationships with that are very excited about this and see this as an opportunity to scale beyond just the Rivian product line for the technology that we've developed, but beyond that into the Volkswagen Group product portfolio. So that's been a really encouraging early read-through in terms of how it's perceived and overall looked at by the supply chain. From a technical point of view, we talked about this even with the announcement of the deal. Volkswagen Group CEO and I, Oliver and I, just spoke around how the teams have been working really well together. And this is not, it's not as if we do a deal of this scale and of this magnitude without having done work together and without having done a lot of, beyond diligence, but into the actual creation of work content or work product, if you will. And so what seems on the call here, I'm going to invite him to just talk about this, but our software team and our hardware team have been working towards a number of elements that deliver on the first set of products, but the first of which is integrating our platform technically into Volkswagen Group products. But Wasim, let me have you talk a bit about this.
Yeah, thanks, RJ. We're actually extremely excited with the progress that we're making in the integration, electrical architecture integration analysis. Our engineers have been working very closely with the Volkswagen Group, and we actually have a drivable demonstrator now that contains the Rivian electronic components, the Rivian software stack, and we're moving forward really, really well in understanding how our technology will scale up and down in the entire Volkswagen Group portfolio.
Great. Thanks very much. Appreciate it.
Thank you. Our next question comes from Ben Kallo with Baird. You may proceed.
Thank you. My first question is more near term. Just RJ, if you could talk about demand trends you've seen since the refresh, and then my second question is, brand is important to everyone, but to you guys, you've done a good job of building a brand. Can you talk to us about how you measure that internally, or any way that you can put context to how you've built your brand and how that extends to future models? Thank you.
Yeah, thanks, Ben. Ultimately, our first set of products, the R1, was our handshake with the world, and they were received really positively. This was 2 years ago, and it was exciting as we introduced the Gen 2 of our R1 products to see how strong the media reaction was to those products, and recognizing we took a great vehicle and made it even better. And that is something that we saw echoed across a variety of different media outlets, from lifestyle to automotive to more pure technology outlets, but recognizing the strength of what we built. And that really serves as a wonderful foundation for the continued growth, as you put it, of how we're building and developing our brand and how we're perceived. And there's lots of ways for us to measure that. We certainly look at things internally. We have a whole host of internal metrics that we track regularly. But I think important for for the analyst and investor community is to look at ways that third parties would look at our brand. And most recently, actually, coincidentally, J.D. Power does a number of ways where they look at the strength of a brand or the strength of a product offering in the market. And we've in the past done extremely well in this, and most recently in their annual appeal study that looks at a combination of vehicle performance and its overall packaging. We came out number one, and that's the number one rated brand in their study. And to do that after having had previous number one performance in previous years is really exciting, and it's incredibly encouraging, and we think bodes really well for what's to come with R2. If we can carry the same brand strength and the same market share penetration that we have at the premium segment, where we're continually one of the best-selling vehicles over $70,000 today in the U.S., if we can take that market share strength and brand strength and apply it with our R2 product into the sub-$50,000 price category, with R2 starting at $45,000 and R3 pricing not yet announced but going to be lower than R2, we're really bullish on what that represents in terms of volume, but importantly, answers a real need in the market where there's a I'd characterize as a pretty severe gap in product choice for great, highly compelling EVs under $50,000.
Thank you. Our next question comes from Shreyas Patil with Wolfe Research. You may proceed.
Hey, thanks a lot for taking my question. First of all, curious what you're seeing in terms of opportunities in the sale of regulatory credits. I appreciate it can be lumpy with $17 million in the quarter, but are you seeing growing opportunities to sell reg credits at this point, just given some of the struggles that we're seeing with the legacy OEMs?
Claire referenced it, just in regards to our top line in terms of revenue, but the regulatory credit environment is certainly very strong right now. And practically speaking, that means we have the potential to generate more revenue around our credits market than what we'd originally planned or anticipated. But I think more importantly is the fact that the credits market is so strong is a reflection of I'd say the decision that we see a number of companies that are going to be investing less into electrification or have less product in electrified product across multiple segments and across different price points. And so that void of products actually creates this strong credit environment. And for us, I think the most important read-through is the demand environment we see coming into 2026, 2027 is going to be very, very advantageous for us, where there's a lot of latent demand. There's a lot of demand that's sitting, waiting for the right type of product, a product that has the right form factor, product positioning, attributes and features. But folks have been sitting, waiting for that product to show up, but haven't seen it, so they continue to buy an internal combustion vehicle or continue to buy a hybrid vehicle. We see this really large pool of demand under the surface that's just waiting, and we believe waiting for something that's very much like what an R2 is.
Okay, great. And my second question is, in thinking about your software architecture, one of the defining elements is that it is almost entirely built in-house, from the baseline operating system to the middleware, hypervisor, application layers. You've talked before about legacy automakers not really having this level of vertical integration, so clearly this is a big competitive advantage. But with VW now able to access the software platform, I'm curious how you think about the long-term advantage in software. Do you still see potential to maintain an edge here over most legacy OEMs, even those that may want to replicate your approach? Or do you feel that the industry will eventually catch up and essentially this is now an opportunity for you to monetize this asset and help the industry make the transition to software-defined vehicles?
There's a few ways to speak to this. I think first, before we get to product differentiation or customer-facing advantages, building a network architecture and associated electronic stack that allows for significant consolidation of ECUs and therefore simplification not only of the number of ECUs, but also of the harness and the associated wiring infrastructure within the vehicle, that creates meaningful cost advantages relative to a traditional platform, which will have, call it 50 to 100 ECUs within the vehicle. And so we've talked about this. Our Gen 1 vehicle had 17 in-house ECUs. We reduced that down to 7. And so it is a significant multi-$1,000 structural cost advantage to have a network architecture and topology of computers that's far simpler and far lower cost than traditional approach. So first and foremost, there's a real cost advantage. Now, of course, our partnership with Volkswagen will extend that cost advantage into their respective products as well, and bring with it scale and volume, which will in turn allow us to source those components and systems at a lower cost. But from a consumer-facing point of view, what it represents owning not just the hardware, but owning the software and owning it around a really optimized architecture, as I described, is the ability to continue to make the software a lot better. So the features can not only become more rich and more robust, but they can truly improve more than just surface level skins on, let's say, your cluster or your center information display, but into deeply into the vehicle and changing the way the vehicle performs dynamically, changing the way its charging profile set up, changing battery management system characteristics. So you can have the vehicle get better and better and better over time in a way that's very difficult when you rely on third parties to produce this complex labyrinth of ECUs and all the associated software, where even small changes require coordination amongst many different players. And so things that can take us minutes can take months for a traditional approach. And so all that being said, what the customer experiences, of course, beyond the vehicle performance and the way it drives and behaves, is what they see, the digital environment. It's also something that the UI framework, the approach to digital design, the approach to user experience design is something that we've spent an enormous amount of time on, and we believe will continue to be differentiated and is facilitated and enabled by our platform, but it requires both. And we hope that by bringing this strong platform to our joint venture with Volkswagen, it allows them to have to create products that are also really compelling and answer some of the points I made before around there is a real lack of choice. I would characterize it as a pretty extreme lack of consumer choice around EVs and products in the space. And in order for us to really scale towards 100% electrification, we need to have more than just a couple of highly compelling vehicles. There needs to be essentially mirror the amount of choice that we have in the combustion world, which we're not even remotely near in the EV space today.
All right, great. Thanks.
Thank you. Our next question comes from Ron Jewsikow with Guggenheim Securities. You may proceed.
Yeah, good evening, and thanks for taking my questions. RJ, you've talked in the past about as Rivian opens new spaces, order intake in those geographies accelerates. I know you've laid out the plan to 2025 for spaces, but is there any way to think about what is launching in the coming quarter or the second half of this year, just to think about demand being an important part of your bridge to gross profit in the fourth quarter?
Yeah, so we have, as you called out, we have a number of spaces that are going to be launching over the next 6 to 12 months. And those spaces are great ways for consumers to get a chance to experience our vehicles firsthand, to sit in them, to touch them, and play with all the features. But beyond just our spaces, we've also really, over the last 6 months, begun activating our service infrastructure to support expansion of our demo drives program. And so we have over 60 service locations that month over month, quarter over quarter, we're growing the number of those locations that do more than just service. And they not only provide service, but they support test drive and demo drives, as well as, of course, delivery and other sales-related activities. And then beyond our spaces, our service infrastructure, we're also continuing to build out our Rivian Adventure Network. That's our DC fast charge network. And that's another touch point for customers to experience the brand. Today, that network is closed to being for Rivian only. But later this summer, we'll be opening our network up, so it'll allow non-Rivian customers to use the network as well, which is a great way for folks to experience Rivian as a brand and get exposure to the products and the exposure to us as a company.
Yeah, thanks for that. And maybe just to follow up on Shreyas's question on credit revenues, do you feel like the $17 million this quarter, or I suppose you probably know this, if the $17 million this quarter kind of fully encapsulates or values your zero-emission vehicles, or is there kind of more to come as we model towards the back half of this year and gross profit break even?
Yeah, Ron, as we mentioned at Investor Day, we have over $200 million of regulatory credits under contract right now for 2024 itself, and there are additional contracts in place for 25 and beyond as well. So $17 million is really just the tip of the iceberg as we think about the opportunity for 2024 and the sale of our regulatory credits.
Thanks for taking my questions.
Thank you. And our next question comes from Stephen Gengaro with Stifel. You may proceed.
Thanks. Good afternoon, everybody. I think two for me. The first, when we talk about the gross profit progression and the expectations for the fourth quarter and beyond, the three kind of key points that were laid out, Claire, can you just talk about, are there any that you have more or less confidence in or are more or less visible at this point?
Sure. As we think about the visibility that we have into the three drivers, which for everyone's benefit is variable cost improvement, fixed cost leverage, and increase in revenue per delivered unit. On the first piece, and that one, as we sit here today, the contracts with our supplier partners are under contract. So we have clear visibility into the cost down efforts that we'll see from a material cost trajectory there. Similarly, as we think about the fixed cost leverage, that will be enabled by our production ramp in the second half of the year as we increase volumes. And then the other component is the reduction in depreciation expense. As RJ alluded to earlier in the call, we're now anniversarying our 3 years post-start of production. And so part of the reduction in our depreciation expense is related to fully depreciating some of our initial tooling associated with our launch. So again, we have clear visibility into the trajectory on that component of it as well. And then the final component, as we think about the increase in revenue per delivered unit, on this end, again, we're ramping right now our Ascent drive unit line that will enable sales of our tri-motor that allow us to skew a little bit higher from a mix perspective. And then I just referenced the regulatory credits that are under contract for this year as well. So have a lot of visibility as we look into the second half performance.
Great. No, thanks. That's good color. I appreciate that. And the other quick one, and I'm not sure if you'll comment on this or not, CapEx for 25, any parameters we should be thinking about?
Yes, as we think about CapEx for 2025, as we've mentioned in the past, we estimate spend to be roughly in the $1.5 billion area.
Okay, great. Thank you.
Thank you. I would now like to turn the call back over to RJ Scaringe for any closing remarks.
Yeah, thank you, everyone, for joining us today. We're really excited with the progress we're making, the transition to our second generation R1 vehicles and the associated cost structure that drives both at the bill of materials level, but also within our operations, within our plant. Is a really important stepping stone for us as a business. And the efficacy through which that launch occurred really reflects the growing capability for us as a business. I'm also really excited to see how customers have continued to react to the product, and seeing how favorably this second generation R1 was seen and continues to be seen, really sets up well for us with what's to come with R2, where R2 leverages a lot of the content, particularly around the network architecture, the ECU topology, the software stack, and even beyond that into some of the componentry architecture that we've laid out with the updates to the R1 platform. So again, thanks everyone for joining. We're looking forward to continued progress and continued efforts on our drive to profitability, and look forward to speaking to everybody soon.
Thank you. This concludes the conference. Thank you for your participation. You may now disconnect.
Hope you all thought that was enjoyable. I'm just going to disconnect my headphones so I can not feel like I'm talking in an echo chamber. But yeah, I'll go over it. So I'm going to go over the Rivian chart now, and I'm going to kind of do it in a way that I'm like recording a video that I'll release later this evening. And then I'm also going to go over the Luminar chart That one more focusing on the daily time frame. Rivian, I will look at what happened in the after hours. And so, nothing really too exciting happened. But if we do look at, the 1 minute time scale, I initially drew these, kind of highs and lows here. The high in the after hours trading session being 1538, and then the bottom being 1318. And so, we traded in that range. We were in this downtrending channel. This is based on the average standard deviation of the price action here. So a little bit on the outside, a little bit on the bottom side here. But we have been trading in this downtrending channel. Those typically break to the upside, but then it started consolidating here, and it just seemed like it was hovering there a little bit too long, kind of like how over here, it was consolidating, but then, started to break down, step down. And so I was wondering, maybe this is a bear flag, like if we could think if this is a bear flag, or really just like bearish consolidation. But then it started to trend up, it's going up, going higher. And I'm thinking, oh, okay, well, this floor here at 1409, it's not really being retested. But then because it's starting to go up, but then it becomes uptrending support, which is more likely to break to the downside. And right now, prices are around 1412. So it might be testing that level. It might be coming down lower. And so, my perspective, I know people don't want to hear it, but my perspective, and I think this will become more clear looking at the daily time frame, is that, whether it's over the course of the next couple weeks or maybe over the course of the next month, when we did gap up, now there's a pretty massive gap to the downside, and that would be bringing price down to around $12. I don't know how long it could take to get there, and maybe it doesn't go that low. But I do think that we're going to be seeing a retracting of the price for Rivian, and we did just get a candle going below this level here. 1408 was the low, or is the low for the current minute, and so I think that that's going to present some good dip buying opportunities, and I think that the roadmap for Rivian into the end of the year, into 2025. I think 2025 and the end of 2024. I suppose when the fourth quarter and full year of 2024 earnings call comes out, I believe it would be in February. When that news starts coming out, I think it's just going to be like the sky's the limit for the stock. I think that there's a lot of promise for them, but also, it depends on what's going on in the broader economy. That could be a precarious time. But I've started accumulating shares, and just before close, I was looking at stuff on unusual whales, and there was a put that expires next Friday, strike of 1350. I got one of them just to kind of have fun, getting more experience navigating unusual whales and placing orders in and out. So maybe I'll close that tomorrow. Maybe I won't. See, it depends on what price we open at, but I'll probably close that this week because, yesterday I did a Palantir earnings call, and I bought a call right before close, but that expires this week, and it was too aggressive, too out of the money, and so I'm going to lose money on that play. But I don't know that I will for this one, considering that we're down almost 5% in the after hours. We'll see, what it does in the pre-market trading and at open. I think that we might be seeing a little bit of a pullback. And so I'm just going to catch up on the comments, and I'm going to kind of do, a live recording of a video. And so Ben asked, well, what do I think about Blink based on today's price action? I'll look at it really quick, but, it's not going to differ from what I said yesterday, probably. So let's see on the daily. It's exactly, what I said. We needed to close above 280, and we got to close below it. So with earnings coming out tomorrow, it's got this, these levels of resistance above it. So I would think that it's probably coming down to at least 250. But, we'll have to wait and see. I'm going to switch back over to the 1 minute time frame and get to the Rivian chart. And let's see. I'm going to, delete Blink from there. And there's an ad that's going to pop up, so I'm going to skip that. And so, yeah, I'm just going to record a couple videos and we'll see where this takes us. But yeah, I want to get to seeing a movie this evening. Kind of intended to do it this during the day, but I put out that video on shorting semiconductors, which I think is really interesting. Kind of a long term, not really, to average into that. It took a little while to put that video together. And so, I want to take a break, go to a movie this evening. But yeah, I'm going to just delete some of this stuff and I'm going to record a video on Rivian now, and I might actually, let's see, I might do this like this and then hide the other stuff so I can hide this sidebar and adjust this so we're just looking at Rivian for this video that I will record. Okay, and yeah, so for it, I'm going to start on the minute time scale, and then I'm going to switch to the daily. And so, there'll be some edit magic that goes on that you'll see the rough cut here and then the edited version later this evening if you want to watch it. But yeah, so I'm going to start recording this video. So, hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Rivian Automotive, ticker symbol RIVN. And so here we are looking at the minute time scale because Rivian just had their earnings call. We were all tuned in listening to it. And before that call, Rivian closed the day on August 6th at a price of $14.80, being up about 1.3% on the day. But following the close, price has come down about 4.8%, currently trading right around $14.10. And so I just wanted to go over the chart here on the minute time scale so I can share my perspective, how it responded to earnings, and then I'll go to the daily time frame so we can have some longer term outlook on some of the price action. And so here, what I have drawn, the high in the after hours trading was at a price of $15.38. We went up to that level, just in the first couple minutes of trading, but then we kind of got these stair steps down to a low during the after hours of $13.18. And, we did get above this level here, which was a 382 at a price of $15.21. That is a Fibonacci retracement. I'll go over that on the daily. And then we did come down to this other retracement level of 50% at $13.56, but that one's in white, so it's a different retracement. I will go over that on the daily, though, in just a minute. But yeah, during the after-hours trading session, it was kind of boring, to be honest, just trading in this downtrending. So just trading in this downtrending channel, but then we did start to consolidate here, and I was wondering if, like over here, this seemed to be bearish consolidation breaking lower. I was wondering if this was bearish consolidation that we might be breaking lower. The low over here was 1409. We started to trend up from there, and then that got me kind of concerned that it's uptrending consolidation that might be breaking to the downside. And you might notice that we did get a little bit lower than 1409, hit a low of 1408. So it's quite possible we do see some more downside moves either later in the after hours or pre-market trading, and I suspect that we will be gapping down tomorrow on August 7th, but maybe we bounce. We'll have to see. And so I am just going to flip over to the daily time frame to look over at that. And but before I do that, maybe I screwed up something with editing, but I just don't want all these levels over here, so I am going to actually delete all of this stuff. And so I think it's just a couple of these lines here, this one here, and up here. All right. Yeah, and so here, looking at the daily time frame, I've got a couple of Fibonacci retracements that might be acting as either support or resistance in the days and weeks to come. And so one of those retracements is this one here in white, should be identifying levels of support if we do go to the downside. And so that is based on the low that was hit on April 16th. At a price of $8.26, and then going up to this high here that was hit on July 12th at $18.86. There's an ad popping up, so I'm going to skip it. And so from that retracement, I've got some levels to the downside based on where we closed at. And just like how I went over in the minute time scale for the after hours trading, we got this level here at 1356, which was tested. That is the 50% retracement. And so I think that we might be hanging out around there, maybe testing it tomorrow. So we'll have to wait and see. Below that, we do have the golden pocket here, which is the 65% retracement up to the 618, ranging from $11.97, right around $12 a share, up to $12.31. And so personally, just looking at the chart, I feel like that level is going to be tested. And there's another reason for that, and that is based on this purple uptrend, but I'll take a step back and go over that in just a second. Another ad popping up. And then to the downside, we also have the 786 here at 1053. First, we got to break below 12, and I don't really see that happening because we do have this nice consolidation here that I do think will be acting as support if price does go lower. And then to the upside, I have done this retracement here in light blue that is based on that high of 1886, coming down to that low that we opened up at on Monday the 5th, when we got that big scare, the gap down over the weekend, which we did reclaim all of those losses. So I do think that is nice. But we did open up that day at a price of $12.96, right around $13. But we did bounce. But we might be getting rejected from the 382 here at 1521. Couldn't close above that level. And so it does seem like that is a level of rejection because we're currently trading right around 1401 in the after hours. It's dropped a little bit more. Above that, the 50% retracement is $15.91, so right around $16. And from that, we do have this consolidation over here. I think that's going to be a tough level to break above. Because of that consolidation, that prior support is now going to be resistance. That consolidation there, it's going to be tough to break above it. And so I'm not going to go over these other levels to the upside because I think $16 is going to be tough to get to. And I think that we will be retracing to the downside. And so to go over some of these other levels that I have here, one is $13.30 and another $12. I did mention that. And so those are based on, these prior lows. $13.30 was the low before, just before this big move up. And 12 was right around here where we formed a bottom before we started to go up, before pulling back and then moving higher. So that's why I have those two levels there. 10.05 was based on the low following this massive down move. And so, that did act as support. We did bounce above it, and then we did consolidate around it here, pulled back to it before gapping up. So if we do break below 12 and we do break below 10.50, I think $10, 10.05, that could be acting as support. But what stands out to me as being most compelling here with the chart is going to be this purple downtrend. I did put out a video, weeks ago, I believe, at the end of June, probably on June 24th, I imagine, because it was right before we had this gap up. I made the case for this being the neckline for an inverse head and shoulders, the left shoulder being over here, head here, and then right shoulder here. And from that, I suggested that we could be getting a measured move from the bottom here, going up to that neckline and then moving it to that break. And so we got a more than measured move there. This would have brought price to around 1721, but we saw that high of 1886. That was a beautiful, beautiful move. But with that, we created this gap here, and to fill that gap, the closing price on June 25th was at a price of $11.96, so right around, $12. And so not only would we be filling that gap, but we would be retracing to this neckline, retracing to the scene of the crime, as they say. And so, I think that coming down to 12, that's a technical level as well as a psychological level. Also, that corresponds with the neckline and a gap fill. So, it really does make sense to me that we might be seeing some downside moves. And that is not to say that I'm bearish about the company or the stock price moving forward, but I do think that there could be some excellent dip buying opportunities. If $12 was missed over here, I think that in the coming weeks and or months, we might be seeing some dip buying opportunities around 12. And if that does not hold, if we break below this neckline, that retrace level, 10.50 and $10 could be excellent dip buying opportunities as well. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. And so with that being done, I am now going to switch over to Luminar to do a live video recording on that chart. And I'm just going to focus on the daily for that one. But speaking of daily, speaking of the minute time frame, we're now trading here below $14. And so, that put that I got right before close, I was kind of debating, do I want to do call? Do I want to do a put? I think that put is going to, not necessarily be closing in the money. It's a swing just for the premium. And, so that could be a nice way to get a little bit of money. And then I can get, some more shares of Rivian as it does go lower. As I don't have a huge position, I dollar cost average into them. And I did think that, looking at this, just like I went over in that video I recorded, that, it might have been, overbought here. And that's actually what we see in the RSI here. RSI is, right around 79, 74 when we were at that high. That does suggest overbought. And as we have seen this retracement, it does suggest that this was indeed overbought, and we will be seeing some more discounted pricing as we are seeing in the after hours now below $14 a share. So pretty neat there. So I might add that actually to the video. I think that's kind of a useful note mentioning that RSI, but I did delete those levels, but this consolidation, it was in fact bearish. It was trending to the upside, but we weren't able to get any moves to really push it higher. It was just kind of like bleeding up, I guess you could say, and it needed to make a move one way, and since it wasn't able to break higher, it's now breaking lower. So yeah, I think that we'll see some discounted opportunities in the coming weeks. So cheers to that. I don't have a beer or anything, but it is what it is. So yeah. But yeah, I'm going to switch over to the daily and then swap to the Luminar chart, which has really not done too much. Pretty boring, to be honest. But I will do a video on it because I think that there's some technical stuff to go over. Might be helpful for people moving forward. And so yeah, I am just going to take a quick peek at this on the 1 minute time frame. But yeah, it's just not done much. It's been pretty boring. So yeah, I'll do another video mock, live recording like I did before. And so yeah, I'll start that in just a second. I think this looks pretty nice here. And so yeah. All right, I don't have to, usually I click the record button when I do these, but since I'm doing it live, I don't have to. So hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Luminar Technologies, ticker symbol LAZR. And here I am recording this on the afternoon of Tuesday, August 6th, just after Luminar has reported their earnings. And, just before that report came out, Luminar closed at a price of $1.40.5, being up about almost 5% on the day, but actually pulling back on the day as we can see that this is a red candle. Opening at a price of $145, but then closing, 4.5 cents lower. And, so with that being said, during the stream, I did peek at this, looking at it on the 1 minute time scale. We can actually look at it now. And, it's just been a bunch of barcoding, nothing too exciting. And so, I think that, maybe this is just that investors have been waiting for some news, the results for this to either take off or tank. And we really haven't seen that. It's down about 1.77% in the after hours, which represents 2.5 cents. So really not too exciting. And so prior to the earnings call, I drew these retracements because I thought that they might be highlighting some levels that we could be testing either to the upside or the downside. And so this light blue retracement here, that was to highlight levels to the upside that might be acting as resistance. And so this retracement is based on the high that was hit on July 16th of 218, coming down to the low that we hit during market hours on the 5th. A lot of stocks, opened at their lows that day, but Luminar actually opened at a price on Monday, August 5th, after we had this big scare gap down across the market, opened at a price of 145, but then hit a low of 139. So did not open at the low, did wick down lower. And so I do have, let's see, the low, low on yesterday opened at a price of 133. And so, on the 5th, when, across the board we saw gaps down in the market, Luminar, actually kind of a peculiar one, opened at a price of 133, but then went down lower to a low of 127, which is where I have that retracement drawn to. And so, I think that's pretty interesting because a lot of stocks opened at the low for that day and then moved higher. But what we saw with Luminar is effectively a spinning top doji. That suggests indecision with the stock, that it could be a bottom, that there's a bounce, or it could mean, like that there's indecision, buyers not pushing it high enough, sellers not pushing it low enough. That's why we get those wicks to the upside and the downside. And so from this retracement, I was thinking that we might be hopefully getting up to like 148.5, the 236 here, or, really like right around 150. But we've been fading, in the after hours. So it hasn't been, not too exciting. But then really the level to the upside that does stand out to me as a notable level of resistance is going to be the 382 here. That is at a price of right around $1.62. And the reason why that stands out as notable to me is because we have this consolidation here that is going to act as, a roof, a shelf for this to have a tough time getting above that prior trading, that consolidation there. There were buyers here, and then if price bounces up to that, there might be sellers there. They might want to trim their positions at break even, or maybe at take profit if they were buying down here. But what seems a little bit more likely to me, especially because we did test this prior low here at 129. This was actually a Fibonacci retracement from the bottom here up to that top. And so from that kind of upside retracement, that would suggest levels to the downside that could be acting as support. And we did do a full retracement to 129 when we hit the low on the 5th of 127. And so I actually view that this could be moving down to, around 130, maybe lower. It does look like the after hours price is around, 138. And so I wouldn't be surprised if we maybe start to head down to this prior low of 121, which was hit on April 18th, marked by that red line there. So I would look for more dip buying opportunities with Luminar. I don't think this one's going to be going to the upside, just not much volume traded. And with that barcoding, it does suggest a good amount of weakness. That price could be driven lower, and that could represent some great dip buying opportunities. And, with that being said, just skipping an ad here. And so with that being said, a level that has stood out to me is going to be this purple downtrend that's based on the pivot lows from November 28th of 2023, as well as December 11th. So from those two pivot points, we got a bounce here, did get a break below it right here, a test of this uptrending level. I was hoping we could be, skyrocketing to that in the after hours today or tomorrow, and maybe getting up to 274 here, the 1618 from this light blue retracing back to this purple downtrend, which has been tested, a lot of price action hanging out around there, and that would suggest price could be coming down to not only 121, but maybe breaking lower. And, I could see price coming down to $1 a share in all honesty, and think about it as, if I was a short seller and I wanted to drive Luminar to a precarious level, that might be $1 a share because they are listed on the NASDAQ. And in order to stay compliant with the NASDAQ, they need to be maintaining a share price of above $1 a share. And if they do drop below it, they would then have, I believe, about 3 months before there would be some compliance issues. And so, if price does go below $1, it's possible we'd be moving into reverse split territory, or, that the company would need to have some really bullish price action going on to get that price back above $1. But yeah, with this one, I see that 130 being as a nice dip buying level, then next 120, maybe getting a little bit lower than 121, and then beyond that, I think $1 a share. So I would say brace for the downside, but look forward into the future. During the live stream that I did this evening, prior to the earnings call, I talked about how Luminar reminds me a lot of Tesla in that you think of them as either, Tesla as an EV company or Luminar as a LiDAR company, but really both of those companies, they're not specific to EVs or LiDAR, they're technology companies. And Luminar is doing a lot with semiconductors, AI, automation, stuff like that. And so I think that they just have a lot of great growth potential. And I think that any dip buying opportunities to 130, 120, or $1 a share are going to be really promising in the long term. But, I am a shareholder. I'm a little bit biased there. So take that with a grain of salt, but, do prepare for the downside. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and take care. And so, yeah, I got that done. And so, yeah, now I'm going to wind myself down, and I am going to try to get those 2 videos out this evening, but I might do it after going to see a movie. And I do see Quodwo has a comment, greetings, any thoughts on AIRE? I'll look at it really quick, but then I'm going to sign off here. So I'll do it really, really quick. And so let's see, AIRE. Let's see, down 2% in the after hours. With this move up, this is on the daily time frame. I feel like with the drop that we saw in the market, over the weekend, starting, with a gap low, I think that we're in a bear market. And so I think that taking risky plays right now is, not necessarily the best idea. So with this one, I don't know much about the company, but with this big up move, I would think that, take profits and, find another trade. But nice up move. Does look like it could be a bull flag, but it does seem like there's some weakness over here. And with that being said, I would say that, maybe we're seeing a potential break of the support here. So how I would assess that is, just being approximate, I draw, this trend line here. We maybe got some wicks down to that level, but we were holding it, respecting it. But then we get one close below it, and that does not represent confirmation because it's just one break of that level. And it does look like today, with the bounce going up nearly 6% on the day, that we haven't confirmed breaking of that level of support because we did close above it. Confirmation would be getting a close below the wick low on the day that did break below it. So yesterday's low was 132. So I think that if we get a close below 132, I think that suggests confirmation and that it's going to be going lower. But we might not see that because, we got a break below it and then we bounced back to that level. It's like a retrace to the scene of the crime. But, I could draw this level a little bit differently, and maybe we didn't, get back above that level. Maybe that's just a retrace to the scene of the crime. Or I guess you could say we did get above that level, but we didn't close above that level. So it doesn't really suggest much strength, especially with there being a big wick there. Suggests there are sellers. And with this being, an uptrending level, if I draw, just based on the approximate highs here, and I'm holding the shift key, so that's completely horizontal, that does look like, let's see, that is an ascending triangle. And so with that being said, that could be breaking to the upside. I believe that, that kind of forms these higher lows and then breaks out, but it does look like it might have broken to the downside. So this could be, an uptrending channel. And, oops, why did I... And that those do tend to break to the downside. So I'd trade this one with caution and just really all trades moving forward. I think that we're in a bear market at the beginning of a bear market, and I think that there will be a lot of opportunities for swings to the upside. Really just like there was an upside move of 5.88% today with this stock. But I think that most trades moving forward are probably going to be short term. Unless it's like you want to have like a multi-year outlook. So yeah, I trade it cautiously. But But yeah, so hopefully that's helpful, but I'm going to wind this stream down so I can put out timestamps on this stream and then get out the Rivian and Luminar videos. But thank you all so much for joining. It was a fun stream. It looks like it got just over 300 views, so I hope this was a nice resource for people. And yeah, I will be not streaming too much or doing too much tomorrow because I'm at work all day. I'll try to get a video out, but the next earnings call that I'll be doing is Plug Power on Thursday morning, and then I will be doing Rocket Lab in that after hours trading session on Thursday. So that should be a pretty exciting day for earnings, just like today was with Luminar and Rivian. But yeah, thank you so much for joining. I hope you guys have a wonderful evening and a great rest